All right, guys. So, man, it is storming on my end, man. My whole family kind of woke up when I woke up just now. It is raining over here, wet, storming. Apple's still holding its gains at 184s. There's the SPY up to 507s on Apple's good news yesterday on earnings. Yeah, Apple's up a lot. Get them a little bit. Oh, never mind. All right, guys. So non-farm payrolls data is coming out in a couple hours. It's expected at for non-farm payrolls. It's the last big report of this week. It's expected at 240,000 jobs. Unemployment expected at 3.8%. Both drop at 8:30. All right. Put this up. Let's get some music playing here. What's up, Radical Yair, Johnny? All right. 1,000 shares of Fubo 2 days ago. Do we have any earnings today? I don't think we do. Let me check. Not any major ones. Like we got, yeah, Hershey's, Fubo. Fubo drops at 7:30 this morning. Let me get a timer up. Yeah, about 2 hours left. There's Apple. Again, we could look at it like Nvidia as well. Most things are up. There's Nvidia. Nvidia's had a pretty good day too, despite all this. Nvidia's up to 860s. Yes, payroll data will affect the market for sure. Possibly bull trap, just be cautious. Yeah, I mean, again, payroll data, we had prelim data come out earlier this week. The expectation was 183. We came in higher than expected at 192. If we look at the market's reaction on Wednesday at 8:30, you know, here was that reaction right here on Wednesday at 8:30. Actually, no, this was Tuesday, right? Let me see. Yeah, that was Tuesday at 8:30. Wednesday at 8:30. Yeah, it was right here. Market didn't really react to this. Payroll data came in higher than expected, and the market actually reacted positively to it right here. Here's 8:30. So yeah, Wednesday the market gapped or moved up a little bit on good payroll data. So maybe we have a positive correlation. It's impossible to really tell how the market's going to respond to it. We got to just wait and see. And again, we'll cover it when it comes out, like we always do. Let's do a poll. Out like we Yeah, so the poll's gonna say, are you bullish or bearish on today's non-farm payroll data? Bull, bear. Yeah, I thought the FOMC meeting was hawkish personally. We'll see if AMD can bounce back as well. Yeah, I got this robe on, man. It's cold and it's rainy and wet. All right. All right, I'm looking at Twitter. So Sam Altman, the founder of OpenAI, shared some mind-blowing insights into AI at Stanford yesterday.
It's hard, it's not impossible.
Less confident about rate cuts. Yeah, I mean, again, that's hawkish. Less confident. Again, but I truly do believe he was hawkish. The only dovish part, like the part that people are taking and running with, are the slowing down of the quantitative tightening comments that he said. He said that they were going to begin slowing down QT more, and he gave some specific numbers on the slowdown of QT. But and again, don't get it twisted, that is dovish, right? Slowing QT down is dovish. By slowing down QT, it ultimately affects bond prices and allows banks to keep or to lower rates. Now the Fed's still going to be keeping their federal funds rate high, and so it doesn't really matter too much, but it still could influence interest rates in a positive way. Just notice he didn't say they were ending QT. So I guess slowing QT down might stabilize interest rates more, but I doubt it's going to make them go down any significant amount. But when Powell specifically spoke, he said that he's less confident in rate cuts. He's less sure that we're going to cut rates this year. He's more data dependent now than he was before. Before the last FOMC meeting prior to yesterday, or the day before yesterday, Powell was pretty consistent on he wanted to cut rates this year. It didn't matter what the data looked like. Now this FOMC meeting, his tune completely changed, and now he's saying, hey, we got to wait and see now, because inflation data was worse. And again, that's what we saw. We saw worse inflation data over the last 2 months. So, yeah, I mean, that's what it is. Yeah, I mean, yeah, you might be right, brother. You know, what I'm saying is like, look, dude, I have seen so many people who, like you, are just like, and again, it's all good, bro. Like, again, this is the nature of the stock market. People are gonna disagree on things, and that's okay. But like you, I've seen so many people that over the last like years, like 2 years ago, they were like this. They came and they said, hey, well, this is gonna happen. The market's extended. They told me this stuff when the market was, you know, here. They had the same mentality you had when the market was right here. You know, and again, I kind of said the same thing, which is that we don't have to crash. Like, if you're overly bearish or unbalanced, I think you're setting yourself up to, you know, it's a risky position. And again, in the end, the market ended up doing this, you know. And granted, to be fair, I think we're in a different spot than we were back then. I guess my point is, like, something I always look for is balance, right? If it's too bearish, if everything you say is bearish, and, you know, there's never a point where you're like, hey, I know I'm bearish, but this was a, you know, a good report, or, you know, this looks good, this looks bullish, you know what I mean? Then I just think you might be a little too biased, brother. But again, maybe I'm wrong. I could be wrong. Maybe the market does crash. I don't know. I don't know. It's all good, bro. Either way, you know, again, we can agree to disagree, and that is the nature of the stock market. Just Costa rebound against Strickland. Costa hasn't won a fight in like 5 years. So I don't know. Poirier versus Makhachev. Makhachev's going to... listen, I'm from Louisiana. So all things considered, I want Poirier to win. He's not about to beat Makhachev, though. I think everybody kind of knows that. I mean, I hope he surprises me. Where's crypto at right now? Coinbase did pretty good with their numbers and then fell all the way back down. Bitcoin down at 59,000 right now. Yeah, I mean, okay, so what's your argument against Apple? Yeah, I'm open into listening about it, brother. Like, what's your argument about Apple? Did you hear Apple? I know it's Apple Sports, so Fubo is yet another competitor. Yeah, and I think Apple can really, like, get it done, too. Costa's only fought elite talent. Whitaker out of Sonya. Yeah, but he's lost every single fight in the last 5 years. Powell could be standing in front of Yeah, but I mean, in the end, CPR, you know, when we look at the inflation data, it's not like, okay, like, look, let me pull up a core PCE graph or a CPI graph, right? Right. Here's core PCE, which is the Fed's preferred inflation metric by Trading Economics, right? And again, you can kind of see April was at 4.7%, May 4.6, June 4.2. So inflation has gone down. You know, it's been flat February to March of this year. And this is PCE. This is the Fed's preferred inflation metric. If we look at CPI, you know, we look at CPI here. You can see a very similar graph. Now, this has to do with rate hikes here. So here's the CPI graph, right? Let's zoom in a little bit here. Now, this has to do with rate hikes 2020 and the pandemic and all this stuff, right? So basically what happened is this. Let me get a little, so again, when you look at March of 2020, pandemic starts to happen. The Fed steps in and they bring interest rates down to almost zero, right? So the reason they did that is because the economy was at risk of depressions and recessions. And so the Fed stepped in, they cut the federal funds rate. They did what's called quantitative easing, expanding their balance sheet and ultimately affecting bonds and helping banks lower interest rates to consumers, right? And so in that situation, interest rates went down to almost zero in this period of time. And for the following few years, the consequence of really low interest rates, the Fed will bring interest rates down to influence and to stimulate spending. Because if the economy is at risk for recession and depression, spending helps. And the reason bringing interest rates down helps spending is because when people spend less money on mortgages and auto financing, they have more money to spend and they spend more. And because of that increased spending, since interest rates were brought down to basically zero during 2020, inflation spiked up. CPI inflation hit all the highs at 9.1% right here. So 9.1% around March of 2022. 2 years later, inflation spiked. So over the past few years since then, the Fed's done the opposite thing. The Fed has reversed it and did what's called quantitative tightening. You know, it's really what they were talking about slowing down in the last FOMC meeting. But again, that's the opposite of QE, which is quantitative tightening is reducing their balance sheet. They're not directly selling bonds, but they're slowing the purchase of bonds and letting their current holdings mature and run off. And what this does is it changes the price of bonds and allows banks to keep interest rates, or it makes banks keep interest rates high. They also raised the federal funds rate in this period of time. All of these things were trying to do what it did, which is bring inflation back down. But you got to remember that inflation is almost never going to literally go down. You can see only one point in this entire 20-year chart did prices actually ever decrease. It's not a reasonable expectation for prices to literally go back down. And so when you hear people say inflation is out of control right now, what they're really saying is that the inflation that happened here is they're still feeling the effects of it, right? Because again, the prices are not going to really go down. They might slow down. And again, they did slow down. So you can see the slow of inflation down here. Now we've been sitting basically at the same spot since 2023 for the last year straight. Around 3%, 3.5%, somewhere around 3.5% is where we've been for the last few years, which isn't really a terrible inflation spot. Like, if we look back at 2020 or 2004, we were right around where we are now in 2004. We spiked higher than that. We've been lower than that. And so that's just kind of the nature of inflation. It's not like 3% is some terrible inflation metric, but that's what a lot of people don't understand. And so that's why, and I'm not saying the economy is all rosy. What I'm saying is, like, we're not really at risks for recessions and depressions. If GDP's going down, that's kind of what these that's what these high interest rates are supposed to do. And again, you can see the high interest rates. You can see the mortgage rates, 8% right now. Real estate people are struggling, but that's the nature of the economic machine that we're in. Anyways, let me look at Yayer's argument. Apple is not growing year over year. They're so proud they managed to make some all-time high numbers, but realistically there is inflation and more people in the world. Yeah, but that's the nature of everything. There's always inflation. That's why the stock market goes up over time, is inflation. If you look at their revenue graph. This is an argument I gave yesterday at the end of yesterday's stream. We had a guy that just acted like Apple was failing because it had declining revenue. You know what I mean? And again, it's not a valid argument in my opinion, and I'll show why. Okay, so like, look, Apple has always done the same thing, right? Where they have periods of growth, they go sideways for a little bit, periods of growth, sideways for a little bit, periods of growth, right? So that is their long-term trend. Like when you zoom all the way out for Apple, that is a very self-evident long-term trend on Apple's chart. Now, when we look at the declining revenue, what it really actually is seasonality. If you look at this December 31st quarter, you know, the holiday quarter, look, spike, December 31st, spike, December 31st, holiday quarter, spike, December 31st, holiday quarter, spike, December 31st, holiday quarter. What happens in the following quarter every single time? Lower quarter, lower revenue, lower revenue. It happens every single time after the December quarter because of seasonality with the holiday season, right? And so us having declining revenue here, which is we showed up about right there, is pretty on trend. It's basically what we've been seeing for Apple since their inception. Like this has been happening since way back here. Spike in the holiday season and revenue, decrease in the following seasons. You know, that's a normal trend for Apple. I think that's incredibly transparent and obvious. And so, yeah, I don't think declining revenue is a big thing. I think people look at some of these companies in a really unrealistic way. I think people have to understand they're not going to be able to always have something like innovation. Like they're going to have periods where there's quiet periods and then boom, massive innovation. Quiet periods, boom, massive innovation. That's what they do, right? And again, they've got 2 conferences coming out over the next few weeks. That where they might debut some innovation, you know. So I think you got to have reasonable expectations for companies like Apple. They're not going to go straight up. They're not always going to debut something game changing and new every single year, and that's not a reasonable expectation for them, you know. Yeah, okay, but I mean, look at this, right? So, again, you're missing the point of this, Yair, I think. Again, so Apple does this, right? Spike, sideways. Spike, sideways. Spike, sideways. Like, that's what they do, right? If you look at this, right, this was lower revenue than this was. You know what I mean? This was lower revenue than the previous year. Right? Like these are very common trends. So this being lower revenue than this is the same thing that you got here. It's the same thing. Like this is the same trend. It's a long-term trend. It really is. Again, they're not going to be able to innovate every single year. It's not a reasonable expectation for them. If it was that easy to innovate, you know, everybody would do it. But I'll put it this way. Apple revenue-wise had their second largest quarter. Second most profitable revenue quarter. Their last one was their second largest revenue quarter. And then, of course, this quarter, we're going to dip relative to that. All right. I know, but I guess my point, Yair, is do you not see the same trend that I see here, brother? Like, look, again, you can see it in their trailing 12-month one, right? Like, again, the trend's very consistent. It goes like this, right? It's very obvious, I think. It goes spike, sideways. And then sometimes in that sideways period, you know, you have revenue going down quarter to quarter, year to year, spike, sideways. You know, you can see it here. Spike, sideways, spike, sideways, spike, sideways, right? Because again, they can't debut a new thing every single year. You got to look at it objectively, I think, you know. Again, Apple's one of the strongest companies in the world. And so you could have a bearish sentiment, and you might be right. Again, I don't know. But if you find yourself betting against these companies, somewhere you've been misled. I said this yesterday. If you find yourself betting against Apple long term, betting against Amazon long term, betting against Microsoft, Meta, Nvidia long term, again, somewhere you've been misled. You know, because the edge is so low, you're chasing rainbows over there. You're chasing waterfalls, I guess is the better way to put it. I grew up in the 90s. Don't judge my analogy here. Thanks, John. Enjoy your Friday and weekend. Great channel. Thanks, CPR. Yeah, well, then you're all good. Yeah, you might be right then, bro. I don't know. You know, we'll see. Time will tell. Non-farm payrolls won't cause market panic. The CPI on May 15th is key. Payrolls are a direct influence on inflation, I think, and a direct tell of inflation, I think, as well, right? So I think payrolls will cause some interest today for sure. Again, though, time will tell. We'll see. All right, guys. Why is he rubbing squid ink? This dude. AMD up to 147s. 147s. Is Dylan Dennis ever going to get a fight in the UFC? Honestly, I think it's crazy for Dana White not to bring him, like, pull him in a fight. He's really good at jiu-jitsu, but really bad at striking. You know, I truly think, like, oh my gosh. Like, bro, okay, if you gotta hire somebody else to walk your dog, oh, poor dog, man. What a horrible video to watch. But if you gotta hire somebody else to walk your dogs for you and your dogs are uncontrollable, you're a piece of crap, dude. Straight up. Like, if you know your dogs are freaking crazy and uncontrollable and you hire some random innocent person to go walk those dogs because you're too lazy or scared to walk them, number one, you're a terrible dog owner, okay? Number two, you're a horrible person, right? You're setting somebody up to be in a bad spot, like a bad situation. And again, I just watched a horrible video. It's so bad. It's so hard to watch that video, dude. Damn, dude. Can you explain how ISM PMI impacts markets? So the ISM PMI is the Institute of Supply Management's Purchasing Managers Index. It's manufacturing expansion versus contraction. The more over 50 it is, the more expansion. The below 50 it is, the more contraction in the manufacturing sector it is. I don't think that drops today though. Yeah. We have ISM services today, which is the same thing but with services, the services sector. Yeah, it's the owners that are bad. Like, again, though, I've told people this before. Like, my dogs, great dogs, right? Great dogs, really well trained, behave for the most part, with some exceptions. Like Bruce chewed up our couch pillow outside, which is a normal thing for dogs. He likes chewing on things. Maybe we need to exercise him a little bit more, is what that means. So we'll have to take him for a walk today. But it's been raining the last few days, and so Bruce is getting stir crazy. It's one of the outside couch cushions, so it's not our good one. But my point is, dogs do stuff like that. Don't get a dog, especially a big dog, if you're not ready for that type of stuff to occasionally happen. If it happens all the time, it usually means that your dog is not getting enough exercise. But I digress. Back to the point. You get a lot of people that want to look cool when they get dogs, and then they don't raise them. They don't train them. Like, if you get lazy with dogs when they're young, you're going to have huge problems when they get older. Huge problems when they get older. If you don't raise those dogs when they're young and teach them to respect you as their leader, those dogs are going to run your house and they're going to be terrible, And again, you got a lot of people. The biggest culprit of this, if I'm being like looking at it objectively, the biggest culprit of this is old ladies. Okay, you might think it's young kids. The worst people that do this are old ladies, right? Old ladies want a dog. They see a sweet puppy. They want another child, for lack of a better words. They get the dog, and maybe it's like a shepherd or a pit or whatever, and they just baby that dog until their heart's content. They treat that dog like it's another child, right? But that dog ends up running that house. They never discipline it. They let it do whatever it wants. They never even get upset with it, and they say, oh, my baby, my baby. Before you know it, that dog's freaking 80, 90, 100 pounds, and it's a problem. Because it thinks it runs that house and it can do whatever it wants. And so the mailman shows up and then there's problems. Like, you just got to raise your dogs. You got to discipline them. They're like children. You got to discipline them if they need to. You got to set boundaries is the easiest way to put it with dogs. You got to set reasonable boundaries with them. Cannabis news? I don't know. Yeah, I mean, I'm for cannabis legalization. I don't know if it'll ever happen. Too much lobbyists against it. This will open up lending for cannabis. Is the reclassification will open up lending. Yeah, currently cannabis is Schedule 1, which means there's no widely accepted medical use. They're going to move it to Schedule 3, which means it does have a accepted medical use. Right, for sure. No, I baby my dog completely. If you ever see my dogs run in here, Daphne, I treat them like babies. Like they are my babies. Like I like Rosie is the most spoiled dog ever, you know. And that's okay because Rosie knows that like I will baby her and treat her great. But if she chews up the rug, there's going to be consequences for it. I never hit my dog, just to clarify. Never hit my dog, don't do anything like that. But if Rosie chews up the rug, I'm going to show her my displeasure, my unhappiness for it. And then I'm going to put her in her crate and I'm going to raise my voice at her and she's going to, she needs to understand that that's not acceptable, right? And she does. Rosie has not pooed in the house in like years since we got her. She hasn't, like, we potty trained her for 2 months. She has not peed or pooed inside since then. Because again, that's the step. If she peed or pooed inside, we'd take her, we'd show her the pee and poo, we'd say no, and then we put her in a crate. And then we let Bruce run around outside, or whatever. And then Rosie realized, especially shepherds, which are really smart, they realize very quick, Yeah, and I've never hit my dogs. I don't ever hit my dogs. I don't ever spank them. I don't do anything like that to them. But they do have consequences if they act up. They're like children. You got to treat them like children. If you treat them too much where they have no consequences, they're problems, Yeah, I hope it does too. It's time to legalize cannabis. It really is. Like, I never hear any. I hear a bunch of people arguing with me on stream sometimes about it. I don't hear one reasonable argument on why we should not legalize cannabis. And again, I say this. It's like you got some people that are just using really old school like propaganda for cannabis, for lack of a better words. Like, oh, it causes laziness. Even if it made you the most lazy person in the world, it should still be legal. Right? What about alcohol? Like, there's so many objectively more harmful substances that are legal out there, and we have to have an even standard of that legalization. We can't pick and choose, especially one that's one of the least harmful things, And so a lot of people are just pushing big, like the private prison industry's arguments and law enforcement's arguments out of some skewed sense of support for law enforcement, where law enforcement's really just doing it to make money. Like they understand legalizing it's going to take business away. They're not going to be able to make as many arrests on it, and that's something that they recognize, and that's getting better over time as well. But yeah. Anyways. Non-farm payroll data expected today at 240,000. Chat, 240K for NFP data. Again, unemployment data has been at 3.8% for a while now. Do y'all think unemployment goes up or down? Chat, what do you guys think? Does unemployment go up or down? Where's Tesla at this morning? Bitcoin has dumped a lot. So Bitcoin has dropped a lot. All right, chat. All right, guys. So yeah, I got a couple good videos of my dogs here. I'm trying to find them. Yeah, here's one. If it'll let me download it. I wish it'd let me download these.
Rosie, you're just the happiest dog ever. All right.
Yeah, I'm trying to find I have videos of my dogs, but all right, guys. So again, payroll data. What do you guys think? Yeah, but in this regard, the government's not involved. It's still private business capitalism, master chief legal. If it's legalized, you know what I mean? Like, it might be different than what it was back in the day, but that's from evolution and growing methods. Yeah, in the next 5 to 10 years, it probably has. Yeah, high fructose should be illegal, I think. Yeah, it is flooding here on my end. It's flooding pretty rough, to be honest. Flooded yesterday too. It flooded and it cleared up so quickly. It was kind of shocking how fast it cleared up, in all honesty. You know, like it flooded and then cleared up very quickly. Flooded, cleared up, flooded, cleared up. All right, chat. So we do have Tesla bouncing up. Tesla at 179.30s here. 179.30s. Bruce was just a good dog. This is when he was little. Yeah. So check Bruce out. So I found an old video of him. Let me see if I can share it. Yeah. All right, so Tesla trying to get over the VWAP though. I was thinking sell 185 calls non-farm payroll. Yeah, expected at 240. Last time it came in at 303, so it's actually expecting a little bit of a decrease month to month. And I think lower payrolls are probably better. See, I'm watching this old video of Bruce when I was training him. I was teaching him bang bang and to lay on the floor afterwards. It took him a little while to get it. Yeah, he did good though. He's learning. Yeah, I'm trying to find like editor. See if I can upload it. I don't even know if Discord will let me upload it. We'll see. I'll try to. Got Jack doing jujitsu. All right, guys. So, there it is. Yeah. All right, so I finally found it. Let's see if it'll let me even send these. Freaking 500. I guess I'm gonna have to get Nitro. No, I don't want the yearly plan. Just do the monthly plan. Yeah, whatever. Hello, X. Gotta be under a minute for Discord. Yeah. Predictions for non-farm payroll are 240K. We also have ISM services PMI data. So dropping today. So, it honestly is a really big day. Alright, so we activated Nitro on the Discord. That's good, I guess. Alright, so it's sending the video. So I'm going to show you guys the video of Bruce. This is when I was training Bruce over a year ago, when Bruce was still kind of little. And he was first learning Bang Bang, right? So I was teaching him Bang Bang, and then he lays on the ground. Now he's a master at it. Now, if I do it with Bruce now, he'll actually, like, for lack of a better word, act. Like, I'll go bang, bang, and he'll kind of go, and then he'll fall on the ground with his feet up. Like, he does it really well now, but this was back when I was just teaching him. He was just learning how to do it. But yeah, so Apple is still up there. I guess the question is, does Apple hold its gains, chat? Does Apple hold its gains? I don't know. I don't know. I think it's iffy. Yeah, ISM services PMI, not going to be the biggest thing, but we do have Fubo earnings dropping in about 7 minutes. in about 7 minutes. So Fubo earnings dropping in about 7 minutes. Are you guys bullish or bearish on Fubo? I have Fubo, believe it or not. It's not the best service, in my opinion. Like, it's not, you know, it's not the best service. So, yeah, here's Carol. Here's Carol with Bruce and Rosie. Like, here's Carol with Bruce and Rosie right here. You know, so there's Carol. That's Bruce right here. Obviously. And then Rosie's at the bottom. They're babies, dude. They really are babies. Like, there's Bruce. He's really sweet, really good-natured. This is Rosie. She's more spoiled and picky and snooty, for lack of a better word, but she's sweet, too. No, Fubo. Fubo, not really a great service. I don't really like Fubo. I have it. I don't really need it for sports. But yeah. Fubo, the problem is that the software is just not good. The software for Fubo, not good at all. Like, the streaming software is just not the best software you could have. So, yeah. So that is... Here, let me try to put up... And then here's the video. See if it'll let me download it. There he goes.
All right, Bruce. All right, buddy. You ready? All right. Stay. Stay.
Man, I sound more country in this video.
Come.
That's Bruce this is like a year and a half ago.
Sit. Gentle. Gentle. Good boy. All right, Bruce. Ready? All right, ready?
Bang, Bruce has got to be a working dog, too.
Bang,
Bruce
bang.
has got way more energy than Rosie does. Way more food motivated. Way more excited to play than Rosie ever was. So he's got to be somewhat... He's got to have some, like, working line in him.
Bang, bang.
Rosie's a AKC shepherd.
Good boy. Good boy. All right, ready? Sit. Sit. Good boy. Shake. All right, here. You get a little piece for that one, man. You get a little piece. Gentle. Be gentle.
Yeah, because he will, like, rip it out my hand.
There you go. All right. Shake. Shake. Good boy. Sit.
Yeah, that's Bruce.
Stay. Stay.
He's a good dog, man. He really is. Really sweet. Really
Come.
good-natured.
Good boy. You're getting better, man. All right. Let's try it again. Ready? We got a piece right here. Okay. Bang, bang. Bang, bang. Bang, bang. Hey. Bang, bang.
He gets it. Now he does it every time. This was
Let's
back
go
when we were
ahead.
first
She's
teaching it
mad.
to him when he
Bang,
was a little
bang.
puppy. He was little in this
Bruce,
picture.
bang,
He was like 8 months old.
Good boy. Gentle. Gentle. Gentle.
There you go.
Nice
Yeah,
work,
so
man.
that's Bruce. He's a good dog. Yeah, dude, he will literally bite my finger. He's so hyper food motivated. He really is. Like, he's so hyper food motivated that if I don't tell him gentle, he will bite my finger. He gets so excited for food. Yeah. Yeah, so anyways, AMD at 146 is still Meta at 441s. We're still waiting. We still got time. He looks like a good boy. You can't really trust the person. Yeah, it depends. Like, you can tell a lot by somebody by how they treat dogs, you know. Dogs have a soft spot for me. Like, you know, I could never be mean to them. If they get in trouble, I can be frustrated and angry with them, but I'm not going to hurt them, you know. Like, the most I'll do is put them in a crate. And you don't need to hurt dogs. Like, people think you need to spank dogs. You don't need to do that at all. It's just like a child. You put a child in timeout. You put the dog in timeout. If they're trained well enough, they will know when you're upset, right? You don't have to do anything else. Like, they will know. And they don't want it. They will genuinely know they're upset or you're upset and react accordingly to it, you know. Anyways, birds are cool. I wanna parrot. Carol's telling me no, but I want to parrot. But yeah, we give them a little bit of egg shells in his food. Both of them. We give both of them a little bit of egg shells and a little bit of the collagen, I think is what it is, in the eggs. We throw a little bit of that in their food pretty regularly. Tesla at 179.50. So Tesla started to bounce back. Again, non-farm payroll data drops in over an hour. So we still got over an hour before payroll data comes out. DraftKings. So DraftKings did have earnings yesterday. It's at 44.18. 44.18. So DraftKings is starting to move up. Again, DraftKings I think is obviously a successful company and a healthy company. The question is whether it's up too much short term, and I don't know. Yeah, so DraftKings is up, AMD is up. Meta is basically flat over the last 24 hours of market activity. Nvidia is the other one to watch. You see Nvidia at 860s, right under the 200 EMA VWAP level. Look at the SPY bounce, though. So look at the SPY bounce right at that 200 EMA volume weighted average price level. It literally bounced directly off of it. Does the market want high or low job numbers? I really don't know. I think either one. I think the market might want... The market... If we're looking at the prelim payroll data that came out Wednesday by Macroeconomic, if we look at the prelim payroll data, the market reacted positively to higher payroll numbers. Payroll numbers came in on Wednesday. Specifically, not payroll numbers, kind of the prelim payroll numbers. It's called the non-farm employment change, or the ADP employment change. It came in at 192. They expected 183 on Wednesday, and the market did push up from that report. Now, that doesn't always mean the same correlation with this report, because again, I've seen it very often where the prelim data on Wednesday will come in higher than expected and the market will react positively, and then the regular data on Friday comes in lower than expected and the market reacts positively to it. So the market's not that predictable, unfortunately, so I would just take everything with a grain of salt here and just react potentially to it. We got exactly an hour before this data comes out. Just understand, gambling, taking big positions ahead of this is a risky endeavor, so just be careful. Question to all, or possibly a poll, John, is $4,000 dividend monthly income enough to just disappear? I mean, the answer to that, I mean, yes. If you don't, basically, I'm guessing you're asking if you don't have to work anymore, if you make $4,000 a month. If it's just you, yeah. Anybody can live off of $4,000 a month anywhere, right? Like, now, depending on where you live, you're going to have a different standard of living. If you try to live off of that in California, you know, you're going to have a much smaller home and much less extra money. But $4,000 a month in like Texas, Louisiana, Florida, you're going to be able to live fine with $4K a month. Let's say your rent, if it's just you could get rent for like $1,500, right? So that gives you $2,500 a month for everything else, and I think that's plenty. Again, the biggest problem most people face, though, realistically, is that they simply live above their means, right? They want to finance a brand new car. They want to, you know, they want a Lamborghini. They want to freaking, you know, they're spending all their money on dumb stuff. Like they want to eat out every day. Like, the problem is most people just simply live above their means. You know, my biggest thing that I waste money on, I'm very conservative with my money. I do not spend a lot of it. I usually stick it all away. One of the things I do splurge on, though, is food, right? So, like, my whole family makes fun of me and mocks me a little bit, because if we have company over, dude, I am buying a freaking platter of food for everybody. Like, I spend so much money on food. I try to take care of people when they come to my house, and I buy them a lot of different foods. And so if I have a friend coming over, if my mom's coming over or somebody, I'm usually buying like a lot of food. So much food that we almost never eat at all. I feel bad, but that's the one thing that I waste on. Everything else I usually stick my money up. But again, it depends. It really depends. Also, consistent dividend income is a different story. You know, like anything that pays super high, like to really make that much money in divvies, you gotta have like $1 million. You know, and so yeah, I don't know. It just depends. All right, so Fubo is out. Sorry, I forgot Fubo. Fubo is out. Did they beat? So Fubo is out. They exceeded Q1. They beat estimates. They showed 11-cent loss versus 21 cents expected. Sales of 402 beat the 381. We'll put this up in chat right here. So here's Fubo. Yeah, well then TK, you know, 4,000 should be enough money. So what you're saying is I need to make a trip to Texas? It depends, man. Listen. It depends. It depends on, like, I got a family, and I know you do too, Pawn, and so, like, it adds up, you know. I just bought my daughter a letter jacket. That thing was like $450. That thing was like $500. $500 for a freaking jacket, bro. These schools are taxing money, man. They know. Yeah. And it's all right. Dell pays a good dividend. I'm old enough to remember, dude, you got a Dell. Dell has done really, really well, though, man. Wow. Dell is up from $50 52 weeks ago, exactly a year ago. Dell was at about $50 a share. A little bit over that, but about $50 a share. Dell is now at $123 a share. That is a crazy gain over the last year. I didn't realize Dell was running that much. It's way too high for me to want to buy it now, though. But, man, what a crazy return for Dell. It's a huge gain. In the Middle East, Forex. Yeah, most people just live above their means, man. And I kind of get it. Like, everybody wants to show success. Nobody wants to say, hey, it's a struggle. Everybody wants to show success, right? And again, I know a lot of people that, like, got themselves in trouble doing so. You know? Like, I know a couple different real estate people where this exact thing happened to them, where they made a bunch of money when the feds brought interest rates down in 2020, like after 2020. I know a bunch of real estate agents, a bunch of mortgage brokers that made a lot of money in those periods of time, right? So the Fed brought interest rates down. It was really easy to sell homes and mortgages because because interest rates were so low because of the Fed, right? So they made all this money. And again, a lot of them were just really dumb with the money, right? They're not dumb in general, but they were really dumb with the money. So they started making all these money because interest rates were so low that they started mortgaging these like $1 million houses and like financing these things, right? Like getting themselves really extended financially. And then inflation spiked. The Fed brought interest rates up. They started QT. They brought interest rates up. They raised the federal funds rate, and because of that, mortgage rates are now at 8%. Right, so it went from being really, really easy to sell a house and to sell a mortgage to being really, really hard to sell a house and sell a mortgage. You know, and again, a lot of them are going to act like, oh, you should always get a mortgage or whatever, But now, you know, now a lot of them have found themselves in the position in which they have extended themselves financially. They've put in all this money trying to look more successful than they ultimately were, right? So like they put themselves in these financing for cars and houses and all this crazy stuff, and they're just not making that type of money anymore. And so, yeah, that's a situation a lot of people that I know have found themselves in. And again, it has to do with them extending themselves financially above their means. You know, you just got to live. You got to be willing to tell people. I get everybody wants to look successful, but you got to be smart. You know, the wealthy people that I know are actually the opposite. So the wealthy people that I know walk around in a t-shirt and shorts and flip-flops. They don't care about having the brand, the like the newest car ever, you know. And so, you know, I think people get it twisted in a lot of ways because they think that like the really wealthy people are trying to look wealthy, and they don't want to be targets. They don't want to be targeted, right? So they want to be ambiguous. They want to be you know, quiet. Yeah, I know about Cyprus. I mean, I would never want to live there, no offense, but I'm used to the U.S. I like the U.S. I'm gonna keep living here. Dell partnership with Nvidia. Yeah, Dell's gone crazy. Friends with a real billionaire drives an old Explorer, you would have no idea. Right. I mean, I'm telling you, again, you know, the famous saying is true, like wealth whispers, or riches yell, wealth whispers, you know. And that's what a lot of people don't understand. There's another saying, don't try to look rich, be rich. And I'm not even trying to act like I'm super successful or wealthy or anything like that. I'm comfortable. Like, I do okay, but I'm certainly not, like, wealthy, you know? Like, I do okay, but Starbucks, man. Again, I'm really tempted to buy Starbucks, and I should have already. I feel like when it hit 72s, I should have bought it. But it's all good. All right, guys, we got 50 minutes. Does NVIDIA look like an inverse cup and handle? I don't know. On what time frame? CVS. I don't trust CVS either, though. It's down a lot from earnings, though. It's down big percentages from earnings, too. What's the PE ratio of CVS? Let me take a look. All right, so CVS PE is about 9. It pays a dividend, doesn't it? Which will affect it. So yeah, CVS does pay a divvy. I mean, it pays a 266 dividend of almost 5%. I might buy CVS down here. You know, I think I'm going to, actually. It's going to be a small position, but I think I'm going to buy CVS here. Yeah, we just bought it at 55. We'll see what happens. I'm not telling you to buy it. I have no idea what's going to happen. It's just got a low PE ratio. It pays a dividend. It's down a lot. So we'll buy a small size position and see what happens. Our money is safe where? Money's never safe in stocks, ever. I'm not telling anybody it is. Hey, congrats, Curtis. That's a good move, man, I think. For sure, brother. Yeah, all good, Forex. Make your money, brother. Do your thing. What the Forex? Beyond Meat in long term, I love the Impossibles. I think that's a terrible investment, Ken. But, I mean, do your thing, brother. I think it's a horrible stock, a horrible investment. One of the worst companies in the market right now, personally. Again, terrible company. No offense. That's just my own subjective opinion. I might be wrong. You know, again, I don't mean to influence you. Do whatever you want to do. Not an investment professional. I'm not liable if you lose. You know, always remember, no idea what I'm talking about. Might be wildly wrong about anything and everything I say. But yeah. Yeah. It's a horrible company. Yeah. Like, again, Beyond Meat's problem is simple. Impossible and Beyond Meat have two major problems. The first one is that they're trying to do deals with fast food restaurants like vegans are ever going to choose to eat there, like health conscious people are ever going to eat at Burger King or McDonald's or wherever they're doing their deals with. That's their first mistake. Their second mistake is that they got pumped up too much too quickly, and it's too expensive. Like, it's simply too expensive to buy BYND. Number three is that, like, it's such a new thing. We don't know how healthy it really is. Like, let's be real. Like, we don't know how healthy it really is, right? And so these are all things that are going to discourage really, like, true health conscious people from buying it. I don't think there's a lot of customers that are interested in buying it as well. And so I truly think that if you're interested in BYND and Impossible, you're an outlier, because most people are not going to want to buy these companies. But again, maybe I'm wrong. Maybe it does well. It is down a lot. I just can't justify paying money for shares. Spy, pull it back a little bit. It's at 506. Gotta switch my headphones out. I mean, if you have to choose one or the other, Ken, meat or this, sure, most vegans are going to choose this, but most of them are just not going to buy either one of them. Most of them are not going to buy this or meat. They're going to buy, tested alternatives. You know what I mean? This is again, I just don't think they have a consumer. I think there's a reason it's been downtrending massively for years and years and years. I think there's a reason it's down from $240 down to $7. It's because the arguments I just said ring true, in my opinion. But again, I might be wrong. Again, like you said, it's the beautiful part of the market. Good luck, brother. I hope you make money. It's not like I'm shorting it, Would higher unemployment be a bullish signal? No, probably not. Higher unemployment is almost always bad. When you do your guillotine, do you slide out of the back or on the side with your hip, or are you flat? Usually I've got one leg underneath them, kind of posting, kind of framing with my shin bone off of them, off of the underside of them. So usually my right leg is framing sideways. So my right leg is framing sideways like this underneath them, and then my left leg is like in guard. So like kind of like a half guard almost, but not full half guard. So like my left leg is wrapped around in guard. My right leg is kind of underneath sideways framing off of them, And then usually lately I've been getting really good at pivoting from the arm in guillotine to the arm out guillotine. So I'll shoot for the arm in guillotine. If they start to try to roll to side control, I will squeeze really, really tight, move my hand out, and then do the arm out guillotine and follow them. And usually I can catch them. I've been catching people like that a lot at the gym. It's been fun, man. I'm learning, John has an unbiased mindset. Great for traders. I mean, I try to be unbiased. Everybody's a little biased. I certainly am. But I appreciate it, Try throwing. Yeah, I mean, that's exactly what yeah, Eric, what you just described is exactly what I just said, right? So that's exactly what I'm doing. I am putting one leg underneath them on their belly, basically, right? And then the other leg is over them, across his back, and so that's how I finish. I finish a lot of people with a guillotine, right? Like I really do. For my experience level, I think people, again, I can only go by what people have told me, and they might just be being nice, So like top 3 worst jiu-jitsu practitioners in the world right now for sure. But my guillotine's pretty solid. Like I've tapped really high belts with it. Again, I tapped a black belt with it the other day. And I've tapped brown belts. The brown belt I didn't tap with a guillotine. I tapped them with an ankle lock. But I've tapped a lot of purple belts with it. You know, a lot of purple belts. And again, the black belt that I tapped, it was the exact way I described it, where I shoot for the arm out, I shoot for the arm in guillotine. He tries to transition to side control to escape it. I transition to the arm in guillotine, or the arm out guillotine. And sometimes I'll follow it into like a Darce or an Anaconda. And that's what I did with him. I transitioned to the arm out guillotine. He tried to roll out. I followed him into mount with the arm out guillotine and caught him, you know. Not gonna lie, I thought you were talking about gymnastics. Now we're talking about Brazilian Jiu-Jitsu is what we're talking about right now. Guillotine's a submission. It's my favorite submission, but yeah. Were they in your weight class? I mean, you know, you get all different shapes and sizes at the gym. I would say, like, in my class, I'm a little bit taller than the other people. There's one guy that's like 6'3" and like 210, 215. He's bigger than everybody else. Aside from that, I'm taller than almost all the other ones. I'm not even super tall. Like I'm like 5'11", but yeah. Any rate cuts will definitely be bullish for, yeah, I mean, but I don't think we're going to get rate cuts anytime soon, residential. I don't even know if we're going to get rate cuts this year. Potentially, Jay. I'm not sure, though. Do y'all think we get a rate cut this year? I don't know. Rate hikes might become a reality. I don't think we're going to raise rates either, Zachary. I think we'll probably just pause until the Fed figures out what it wants to do. I think raising rates would give a bad signal, a bad sign to markets, and they don't want to cause panic. I think a cut is more likely than a hike, but I don't think we're going to do either one of those anytime soon. Krav Maga is good, but it's like, I think Krav Maga can be good, but there's so many different schools that have opened up that are trying to piggyback off of it that it's really gotten diluted a lot. Like, Krav Maga is great, but it's also just kind of common sense. It's like, hey, you know, like some of it is just common sense. So I don't know if most people even need to be taught Krav Maga. If somebody with jiu-jitsu knowledge fights somebody with Krav Maga knowledge, the person with jiu-jitsu is still probably going to win, you know. Are you in Boeing? Yes, I'm still at Boeing. Green on it as well. Nicely green, too. My average price is 172 on Boeing. I'm also in Alibaba, green on that one as well. My average price is 72.50s. It's at 81s now. So, yeah, we bought Alibaba. We bought Boeing a couple weeks ago. We've been in it. We took some profit on it yesterday, but, yeah, we're still in it. In my honest opinion, what are we really waiting on is for the yield curve to reinvert. The longer it stays inverted, the worse it's going to be. Maybe, but, you know, time will tell. Again, it's really going to depend on what inflation looks like this month, next month, the month after. That's going to influence when the Fed cuts. Rate cuts would mean something is broken in the economy. Not necessarily. It is an election year. So I think that even if the economy doesn't look like it's struggling, I think they still might cut rates. Again, I really think it depends on inflation data, right? So basically, the economy can be moving in a really good way. It can be very strong, and the Fed can still cut rates because of less inflation worries, right? If inflation goes down, the Fed might cut rates regardless of how strong the economy is. And so I think we might cut rates this year regardless of what the economy looks like. You know, typically we cut rates if the economy's at risk, but this year, even if the economy's not at risk, if we see inflation getting more and more under control, we still might cut rates, right? But again, who knows? Only Powell and the FOMC know. Used your link for Apex. Why can't I trade individual stocks, not just indexes? Because this is a futures platform, chartist. You know, it's not for stocks. I never said it was. I said it's very similar to day trading stocks. You can day trade the SPY price action in the S&P 500. You can day trade the Q price action in the NASDAQ 100 in futures. You can't trade individual stocks, though. Like, you can't buy Apple or Amazon, you know. It's a futures platform, brother. They would do QE before rate cuts. I disagree. QE is more of a desperate thing, right? So QE is something that they would do if like 2020 they did QE because the economy was at risk from the pandemic, right? But again, understand, like, business as usual is rate hikes, rate cuts. The Federal Reserve directly influencing short-term rates. If something is at risk, that's when they'll step in and they'll do QE. And if inflation's at risk, then they'll do QT, which is what we've been in. And that's why the Fed's talking about slowing QT down. And that's why a lot of people interpreted yesterday or the Wednesday as optimistic. All right, chat, we still got 30 plus minutes. SPY has come all the way back down under the 200 EMA volume weighted average price. Yeah, I think the biggest thing that most traders get wrong in trading is that they try to sensationalize long-term market action. Like, every major economic report, if the market drops 0.5%, people are acting like the market's going to crash. If the market bounces 0.5%, people are acting like we're in the biggest bull run of all time. And, like, again, that's sensationalizing it. In the end, this is the SPY over the last year. Very strong, like, business as usual trend. Like, this is what, you know, this is why I tell people, like, if you find yourself shorting broad markets long term, you know, you're missing out on one of the biggest edges you'll ever have. Again, the biggest problem, the biggest reason people don't like, the biggest reason I'm critical of the bearish traders sometimes is because they're always wrong, man. Like, they're always wrong. And again, that's the problem. Like, you can't be so desperate to be contrarian that you ignore edge and long-term edge. You can't be so desperate to be contrarian and to be the next big market crash predictor that you ignore true edge, which is long-term value investing in the S&P 500 and other index funds. That's the biggest edge you'll ever have in markets. And so trying to top pick this, trying to pick the top on this is one of the dumbest bets you could ever do. Long-term, right? Short-term, do whatever you want to do. Short, do whatever you got to do. But again, a lot of people either just missed out on these big bull runs and so they're emotional about it, or they're shorting and they're buying put options and they don't know why they're not working, you know. But hey. Alibaba looking really strong here. Really, really strong. Again, SPY at 507s. Yeah, so I'm looking at a 30-year conventional 8 to 8.1% APR. 15-year conventional at 7 to 7.18% APR. 20-year conventional even higher at 8.125%. Ugh. Gross. I speak for me and no one else. Are you living in the same America I am? I know the stock market isn't reflective of the economy. Yeah, but you're acting like it is. You know what I mean? Like, you're acting like the stock market and the economy are the same thing, and they're not. They're completely different things. Like, really, like, in theory, right? So the Fed's been in the middle of quantitative tightening, which is trying to keep interest rates high and push spending down. If the stock market reflected the economy, then in this period of QT and a hawkish Fed, the market would be dropping, right? But it's not reflective of the economy. It's two completely different things. The sector of AI has been running up the stock market over the last year and a half. Right, and this is when the Federal Reserve and the economy has been fearing inflation and spending, and the Fed's been trying to keep interest rates high to discourage that spending. Right, so again, the economy and the market are two completely different things. Completely different things. Right, they really are. They're two wildly different things. They don't move the same, and we can't treat them the same. You know. My son closed on his first house in 2 weeks, 7.675%. I would never get a mortgage right now. No offense to anybody that is, but I would never get one. All right, guys, SPY back up here. We got 30 minutes. 30 minutes. We got about 700 people here live already here, chat. I warned him, but he's ready to move out, yeah. But even then, the whole sentiment is all wrong. We have high rates because the economy is too high. You want someone to blame for... Yeah, Chipotle. Yeah, again, one thing that you realize very quickly is, like, people are dragged in a lot of different ways for a lot of different reasons, right? Like, the best example of this is mostly political bias. I see as the one that catches most people. Like, I have family members that act this way, right? And so that's the ones that I see the most, where I see people kind of just, like, regurgitating political talking points. Like, the biggest ones you hear are, they changed the definition of a recession. You know, you hear that one a lot, or you hear... you know, you hear inflation's a big problem. You hear all these different things. You hear the numbers are wrong or whatever. Most of these are just political arguments, and they're just they're getting people all riled up politically for different reasons. And again, I'm very neutral politically. I'm not against you. I'm not for you either. I'm very neutral. I don't care about politics at all, to be honest. But it is an election year. But again, right now, a lot of people don't understand economics, and so they just kind of make a blanket statement like we're in a recession or we're in a depression. And of course, we're not in a recession. We're not in a depression. Again, payroll numbers have been coming in higher than expected. GDP is still growing to a point in which the economy is hot enough to where the Fed has been wanting to keep interest rates high, right? If the economy was at risk for anything significant, and I promise you, Jerome Powell, regardless of what people say, does not want to crash under his watch. He doesn't want a market crash. He doesn't want the economy to tank under his watch. I promise you he doesn't, right? Because that'll make him look bad and hurt his legacy. And so he does not want the economy to crash into a recession, a depression under his watch. And if we were anywhere close to that, Jerome Powell would immediately bring interest rates down to try to save it, right? But we're nowhere near that, right? What we're actually in is the economy is really, really hot, and it has been. I'm not saying things are rosy and everything's all good, right? But the economy, specifically spending, has been so high that over the past few years, inflation spiked. Inflation got up to 9.1% a few years ago. And so because the economy and the labor market were strong, the Fed has been keeping interest rates high, trying to push it down, right? Which is the opposite of a recession and the opposite of a depression. But again, people get wrapped up in politics. They get wrapped up in all these different things. And again, when you start to understand the economics of it, right now interest rates are high. And there's a reason for that. That's intentional. The Fed's trying to keep them high to stop people from spending as much, because the more people that spend, the worse inflation problems get, right? And it'll be an interesting look at payroll numbers. So payroll numbers come out in 25 minutes. That'll be interesting to see what happens, in the context of all this stuff as well. I wouldn't say either. What's better for the economy? Higher, I mean, if we're talking economic wise, higher employment and more economic growth is good for the economy. It's bad for inflation, right? So there are two different things. The economy and inflation are the two different sides, right? One, with interest rates low, with the Fed being what's called dovish, they want to bring interest rates down to encourage spending, to stimulate spending, because if people are spending less money on loans, they have more money to spend on other things. And so by bringing interest rates down, it allows people to spend more, right? That's one side. That's if the economy is at risk for a recession and depression. Think 2008, think 2020. These are times when the Fed stepped in and did QE, quantitative easing. They brought interest rates down. They cut rates. They did QE, which is just expanding their balance sheet through bond purchases, allowing banks to lower interest rates to consumers. That happens, and again, that's a dovish Fed. That happens if the economy is at risk for a recession or a depression, right? If the economy is at risk for high inflation, and the economy's not at risk, but if the economy's too strong to where people are spending too much and prices are rising unreasonably, then the Fed does the opposite. They do what's called QT, which is what they're starting to slow down now, which is the dovish part of the Wednesday meeting. They do what's called QT, which is the opposite of QE. Again, in QT, they stop buying bonds. They let their current bonds mature and run off their balance sheet. And this affects the price of bonds and takes liquidity away from market and causes banks to keep interest rates high, right? They also will just straight up raise the federal funds rate, which is short-term interest rates. And again, they do this if the labor market and the economy is too strong. And again, no matter what, people are going to complain. If the Fed's keeping interest rates high, trying to push the economy down, people are going to say, oh, interest rates are high, inflation is a problem, you know what I mean? If the Fed does keep interest rates high and tries to discourage spending and jobs start to decrease, people are going to say, oh, jobs are going down, unemployment, recession risks are here. And so no matter what, there's two different sides. No matter what, people are going to be unhappy. And that's something that you learn you see it pretty regularly if you watch the economy cycles here. high is subjective, BB. So I mean, we could argue about high. I could say chocolate cake is good. You could say chocolate cake is bad. Are either one of us right or wrong? Of course not. You know, high is subjective. High, it depends on the context and the time frame you're looking at, BB. If we're looking at the last 10, 15 years, 12%, or if we're looking at the last 15 years, you know, 8% is high right now. 9% is high. If we're looking at the last 50, you might be correct. But it depends on which way we're looking at it. Yeah, I mean, we can blame the hot economy on whatever, right? Like, again, I'm not, like, we can look at whatever and blame the hot economy on whatever. Again, none of that matters. What matters the most is that spending is high and inflation is spiked because of it, right, over the past few years. Regardless of any other nuance of that, spending has been high, which means we're not in a recession or depression, you know? Then again, you got to understand, like, politics can, a lot of the time, they'll just try to make it seem like it's the worst it could ever be. Because, again, they want their guy to get elected, right? And I think you got to be resilient to that and kind of zoom out and look at things objectively. And it's hard to do, especially with all the stuff going on. But it's important to do, I think, if you're looking at the economy and you want to look at the macro economy. Yeah, but I mean, Jay, listen, I think it's more important right now to focus on keeping interest rates high and discouraging spending. You know, I think prices have already gone up. And again, prices very rarely literally go down, right? Like, here's an example. Here's CPI over the last 12 months, over the last 20 years. Okay, one thing that you'll see, again, 2020, the Fed stepped in, they did QE, they brought interest rates down. This contributed to spending so much that the consequence of it is that inflation spiked up to 9.1%, hit 9.1% here. Again, that's a consequence of more spending, of a too hot economy, where the economy's too hot and too many people are spending, prices are going up too much. There's a lot of nuance behind this. It wasn't just that, like, prices were rising for a lot of different reasons after 2020, from imports and exports and all these different things influencing prices. But anyways, the point is, too much spending was occurring in the economy after interest rates were dropped down to almost zero. Afterwards, right, the Fed started raising interest rates, and they brought interest rates really high, and that started to decrease inflation. And then CPI inflation has really been kind of stagnant since then. It's been flat. It's not at 2%, which is like here, you know, but it's also not like, if we look at inflation over the past 20 years, we're really kind of where we were in 04 and 06. It's not like we're crazy high like we were up here anymore. But the reason people think we're still high is because, again, you can look here, very rarely do prices literally go down. This is the only time in the last 20 years, this is the only period where prices have literally gone down, right? The best we could do is expect it to slow down. The best we can do is slow inflation down. Very rarely will prices ever go down once they go up. And so what people are saying now is, like, prices are up. You know, food prices are high. Oil prices are high. Oil prices will go down, but that's a different story. But prices have gone up in food and other things so much that people still think that inflation is, like, out of control, where it's really not out of control anymore. But the prices went up so much in the last 3 years that, you know, it seems like inflation is rising at an unprecedented pace. You know, it's not. Inflation's still at 3%, which is pretty average, I would say. But they went up so much in the previous years, and very rarely do they actually go back down. You know, that's the thing to understand. And so, again, because of that, I don't think we can handle more inflation spikes. And so because of that, I think the Fed needs to keep interest rates as high as they possibly can for as long as they possibly can. Because once inflation starts to spike, it's like a domino effect. It can snowball and get out of control really, 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 really fast. And I believe the Fed understands this. And so despite the real estate agents and the mortgage people and the lenders wanting low interest rates, we can't handle more inflation right now. And so regardless of anything else, I think the Fed, and I agree with the Fed in this way, I think the Fed needs to keep interest rates high. I don't even think we should slow QT down, but that's my take. I think we need to do what we can to keep interest rates as high as possible and discourage spending so that we don't have another inflation disaster, because that's essentially what can happen if inflation starts to get out of control. Again, it's the opposite of a recession and depression. It's we can't handle more inflation problems right now. Prices have risen so much over the past 3 years that if prices continue to go up, it's going to be unsustainable. And so again, that's the real look at it, in my opinion. And again, like I'm saying, we're not in a recession and depression, but things aren't all rosy and great either, you know. So that's my take on it. John, I'm talking about GDP growth, not rate decisions. What did you say originally? Oh, I disagree with the current economy growth. Economic expansion should not outpace inflation. Well, right. Well, but GDP growth is a consequence of spending, you know, which again is from the low interest rates of 2020. All right, chat. We got about 1,000 people here. We still got 16, 17 minutes left until these data drops. Let's be ready. Yeah, I mean, spending is bad right now. It's too high. And again, payroll numbers are going to be a direct look at that. So it'll be fun to see what happens here. And we'll see how markets respond. And again, I think, again, no offense to real estate professionals, but I think they just got to deal with it right now, right? Like, high interest rates are here. Deal with it. We shouldn't lower rates for any reason right now. I think we need to keep interest rates high. I think we should maintain a high federal funds rate. I don't necessarily think we should raise rates, but I think we should maintain this high, the high federal funds rate that we're currently in. I don't think we should pause. I don't think we should pivot to a cut, or I think we should pause at least. And again, I wouldn't be mad if we raised again, but also understand that the longer we do this, the greater economic risks are there, right? And there's a lagging effect to it. So the longer we keep interest rates high in this way, the more the economy will eventually be at risk if we sustain that for too long. So all right, chat. Hey, we got 14 minutes. We got over 1,000 people here. Right, exactly. I mean, people need to understand, again, people are still complaining about the inflation spikes of 2021 and 2022. Prices are probably not going to go down. That's something that you just got to get used to. And again, you see the stock market rising. Like, typically things are compensated for it. That's the other thing to understand. That's why you really got to ignore the people who are always telling you the market's going to crash, because you're missing out on the compensation for these high prices in doing so. And again, that's the thing that I think they miss, right? And so if you don't hedge your money with investments, you're going to lose your cash over time to inflation. Objective truth. If you do not invest in things, you are going to lose your cash to inflation over time. And this is the biggest problem I have with people discouraging others from investing. It's ridiculous. You know, again, if you don't hedge, you're going to lose money. Again, buy the S&P, the NASDAQ, gold, silver, real estate investment trusts, bonds, you know, depending on your risk tolerance. I can't guarantee any of those are going to make money except for bonds. Bonds, you know, are guaranteed by the U.S. government. But again, not an investment professional. I'm not liable if you lose money. Just don't be dumb. Like, again, throughout any period of time, you're going to have people telling you the market's about to crash. And maybe they're right this time. Again, they're probably not, but maybe they're right this time. It's certainly possible. But again, if you take too much, if you don't heed that, if you heed that too much, I mean, you're going to lose money to inflation over time. Over time, your cash is going to get dwindled down. And this is the nature of the world. It's one of the reasons a house, you know, 30 years ago, a $200,000 house 30 years ago is going to be a much nicer house than $200,000 house today. And so, point is, hedge your money, guys. If you don't, you're going to lose it to inflation. Again, buy bonds. Bonds are guaranteed by the U.S. government. Yeah, I don't know what Apple's going to do. I disagree. Cash is always king. I mean, I don't think anything can be more wrong than that, comma. It's all good, brother. But, like, of course, you have to hedge money with inflation. You got to, brother. Like, listen. Cash is good. I'm not saying you shouldn't hold any cash. What I'm saying is that the S&P 500 gives you, on average, 10% a year in gains, right? About 10% a year in gains. And so if you are not hedging your cash against inflation, you are going to lose money if you're not investing in hedging. Let's use a $50,000 lump sum of cash as an example. Let's say inflation grows at what, 3% a year? All right. So let me see if it'll actually let me do this. So I know an easier way to do it. So let's say inflation grows at, yeah, no, it won't let me do it. Let's say inflation grows at 3% yearly. All right, so let's see how long this is going to take to dwindle your whole $50,000 down, right? Oh, wait, sorry. Okay, yeah. I'll just do it this way. Cash is crap. I bought 4 rental properties in the last 4 years. Look, okay. Easiest way to put it is if you invest 50,000 times 1.1. All right, so this is the compounding formula. You invest $50,000. Right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. $50,000 in 15 years is going to turn into $208,000 roughly. Right? It's never guaranteed, but with compound interest, it's going to turn into $208,000, $50K. So it's going to over 4x in 15 years. You know? It's going to over 4x in 15 years. You know, so if you're not hedging against it over time, you're going to lose money. You're going to lose money. And again, to be fair, in 15 years, $50,000 is going to be noticeably less buying power. Yeah, we're not going to give out signals telling people what to buy or sell. Yeah, no, I know. It would be 50K. Look, it would be this times 0.97. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in 10 years, your $50,000 is going to be the equivalent of today's 36,000. Yeah, so no, I understand the formula here. I wanted to show people what you get in the S&P 500. So again, in 10 years, $50,000 is going to turn into $36,000 in buying power. And so if you don't hedge against your money, that's 10 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 20 years, it's going to be worth 50% less. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 30 years, it's going to be worth 60% less. You know, so again, be smart, chat. All right, guys, we got 7 minutes here. 7 minutes. The best thing to do, if we're looking at inflation over time, the best thing to do is to diversify. All right, so if it was up to me personally, and again, I'm going to preface this with, like, this is just my own specific, way I would do it, okay? I would buy S&P, NASDAQ, gold, silver, real estate investment trusts, also rental properties to make cash flow, as well as probably 10-year government bonds to diversify and to hedge a little bit more over risk. Again, maybe 10-year treasury bonds, and then probably a little bit of crypto too, maybe like 5% crypto. That's what I would do, you know, and I would just sit on that long term. And with that, you're almost guaranteed to make money long term, right? And it's also super diversified. That would be my portfolio if I was trying to keep up with inflation, because all of those things, for the most part, gold, real estate, silver, bonds, these will all keep up with inflation with varying degrees of success, right? But all right, chat. Why silver? I mean, there's a lot of reasons for silver. Silver, you know, outperforms gold in some ways, number one. Number two is it's less, so it has a lower barrier of entry. Number three is that as technology grows, tech is going to require more and more silver over time and be much more precious of an asset. There's a lot of reasons for it, but yeah. Telegram gurus telling people they can turn $500 into a ton of money. Bro, they're so out there, dude. Honestly, it affects people. They're like, hey, if you give me $500, I can turn it into 30 grand in 2 weeks. Yeah, right, bro. It's freaking alchemy. Again, I'm not telling you to buy silver. I like it, but do what you do. Make your own decisions there, chat. Yeah, I mean, these are contractors that are working for me. That's the notifications you hear. They're just contractors. All right, chat. We got 1,500 people here. We got 4.5 minutes left. Chat, 4.5 minutes. Let's do this. Yeah, politics has people betting against the stock market long term, and it's one of the dumbest bets you could ever do. Which is why I hate politics. On both sides, in all honesty. I don't know what's good or bad. Again, the expectation is 240,000, 240K. I don't know what's good or bad. Wednesday, we had prelim payroll data, and higher than expected had a positive reaction. So more economic growth. Higher than expected payrolls, obviously, is more economic growth. Lower than expected payrolls is less economic growth. All right, so again, Wednesday we had prelim data, and it showed more economic growth for payroll numbers. But we do have inflation problems, and I think Powell was very hawkish, right? Meaning he wants to keep interest rates high and discourage spending. And so I don't necessarily think if we get higher payroll numbers today, the market's going to react positively. I think anything could happen. I think higher payroll numbers equals economic growth, but also more inflation problems. Lower payroll numbers means less economic growth, but less inflation problems, right? And so the market could essentially fear either one of those things, and we don't really know. All right, chat. 2.5 minutes. 2.5 minutes. He said that he didn't even know if we were going to cut rates this year. He wanted to keep interest rates high, and he thought inflation was still a problem. Those are pretty hawkish things. There was some dovish things about him. He said that he was slowing QT down. That's a dovish thing. But again, he's going to keep interest rates high. The previous meeting, he said that the base case was that we were going to cut this year, most likely. He didn't say that this time. So again, he didn't say that we were going to cut rates this year, which is hawkish. You know, again, it's subjective, I guess, your interpretation of it. So it's all good. We got less than 2 minutes, chat. We got about 1,800 people here live. Less than 2 minutes. Again, we're not going to give signals. And if you know, again, if we're going to, never mind. Yeah, well, real estate's been in trouble. All right, guys, 1 minute left. 1 minute left. We'll have about 2,000 people here live. Be ready, chat. Be ready. The reason we get thousands of people here is because we try to cover it as fast as we can. All right, guys, be ready. It's Friday. Expectations is roughly 240,000. Unemployment expected at 3.8%, chat. 3.8%. Hit the live button next to the play button. We got 40 seconds left. Chat, 40 seconds left. Again, payroll numbers expected at 240. Unemployment expected at 3.8%. 30 seconds. Again, hit the live button next to the play button. Make sure you're fully caught up on stream. 20 seconds here. Chat. All right, 5 seconds. Let's watch the spy in the middle. And here's the report. 3, 2, 1. Payrolls, 175,000. Way lower than expected payroll data. 175 versus 240 expected, and the market loves it. Market is ripping up on this. Unemployment came in at 3.9%, slightly higher than expected, and lower payroll numbers at 175. I think all the hawkish Fed is making people optimistic in lesser payroll numbers. They want lesser payroll numbers because it means less inflation problems. So again, chat, market is flying up on lower than expected payroll numbers, chat. Remember what I said before the stream? I told people I didn't necessarily think higher payroll numbers would cause a good reaction and lower payroll numbers cause a bad reaction. And we were right. Lower payroll numbers showed up at 175 versus 240. Market ripped up to 511s here on the SPY. Unemployment slightly higher than expected, but it's still under 4%. Again, way lower than expected payroll numbers, chat. Way lower than expected. Also, we're going to throw this in sub-only mode. So if you haven't already, hit the sub button. Hit the notification bell. Lower payroll numbers than expected. Market loved it. It's up to 511s here. Chat, Apple up to 186. And again, to put this into perspective, if we were in a recession or depression, like some really politically biased people think, the market would certainly react very negatively to this. No? You know, again, lower payroll numbers would signal economic weakness. People would react negatively to this if it was, and if we had any type of recession or depression fears. Unemployment at 3.9%. Again, at the same time, chat, with all that said, sometimes the first move is the wrong move. So sometimes the first move is the wrong move. We've had a massive spike. Look at NVIDIA. NVIDIA is really what spiked. NVIDIA got up to 870s here, chat, on payroll data. 870s. So NVIDIA is really one of the ones that spiked here. I thought the market might not necessarily want lower payroll, or I thought the market might not necessarily want higher payroll numbers because of inflation problems. It looks like I was right so far, but again, maybe we turn. I don't know. The market is not, yeah, I mean, in this regard, in inflation terms, it is to a certain extent. So like higher inflation typically causes a negative market reaction because less people have money to spend on stocks and stuff like that, and vice versa, right? So payroll numbers coming in low signals what? in markets. It signals less spending, and ultimately less inflation problems. And so I think that's something that's very clear. Nvidia spiked it up on this data too, so Nvidia likes it in the end anyway. Yeah, I mean, it certainly could be a bull trap. Again, sometimes the first move is the wrong move. And so, yeah, I mean, time will tell, chat. We still got to wait and see, in all honesty. Apple's still moving up, though. Yeah, market is pumped. I'm going to take a little piece of my Apple position off just because I'm already up a lot. And again, we do have some volatility. Yeah, we're just going to take a little piece, lock that profit in. Market's testing highs again at 511s here. Meta ripped up as well. We're in Meta also. AMD spiked it up as well. We're almost green in AMD. It took a while. Nvidia spiked it up too, chat. Well, and again, guys, if you want to day trade with me, today we're going to be day trading on a platform called Apex. It's a funded account program. And if you want to day trade, do not put up thousands of dollars trying to day trade stocks or options or something like that. Almost all day traders lose money, right? And again, to be fair, most day traders are going to lose on the platform I'm talking about as well, because most day traders lose. Doesn't matter where they trade. It's a lot cheaper to lose on the platform I'm talking about here. It's a funded account program in futures. And in the futures market, you can't trade stocks, but you can day trade the S&P and the NASDAQ index funds, which is the largest funds in the world made up of stocks. Patterns are very similar to blue chip stocks. If you look at Apple on the left and the SPY, they're both spiking up here, very similar. And there's no PDT rule in futures. So you can buy market, sell market, all that good stuff. No PDT restrictions. A great way to learn how to day trade is using these funded account programs in futures, because again, they give you a demo and they test your skill with a demo account. If you can pass the test with a demo, they fund you between 50K or between 25K all the way up to 300K. The base one is only 30 bucks. And if you pass it, you get 25K in funding with a 90% split. Here's me on a $50,000 funded account, on an actual funded account with 50K on Tradeovate. You can see I'm up about $1,500 this week. So you can see it's this week up about $1,500 since April 28th. You can see we had gross P&L of about 1,800. You can see my profit graph. You can see my accuracy right here. We're up about 64% accuracy. And so again, if you want to day trade, it's the best of both worlds in my personal opinion. Although again, they are a sponsor. I'm biased because they pay me money. I always try to tell people the same thing. They pay me money. I'm biased. Confirm all of this stuff with them. I can't guarantee any of it, but what they do is they give you a demo and they test your skill. And again, if you pass the test, the base one, you got to make 1,500 in profit on a 25K demo without losing 1,500 first, a 1-to-1 ratio, reasonable. If you do that, you get 25K in funding with a 90% split. So once you're funded, if you make 10K, you get to keep 9K as long as you follow their rules and fit their conditions with it. And so again, a great way to learn how to day trade. You got limited risk, but if you pass it, you get a 90% split anyway. And again, they pay out millions of dollars. They've paid out over $100 million to their traders. And so if you want to check them out, a great way to help support your boy here in this channel, there's the link for Apex. Yeah, I'm going to ban this guy just because he's trying to... Never mind. Check out, again, if you want to use the coupon code BT, it'll get you the max discount at all times, which currently is 80%. Market's ripping up. Look at Apple, guys. I'm in Apple right now. You love to freaking see it. Home Depot is in. I'm in a Home Depot as well right now. I think I'm just going to sit. Actually, I'll take a little bit off of Home Depot. I'm already up in it. We bought it a couple weeks ago. Nice. Okay, I'm going to sit in most of it. We took like a 25% of the position off. You love it. You love to see it. Intel even bouncing up a little bit today too. We're in Coca-Cola. It's up. Gold flying. Tesla ripping up too. We're probably just going to stay in that. Boeing is doing treat me right. Baba is treat me right also. GameStop spiked. We're still in GameStop. I'm also at Ford. I'm slightly green in it. I think I'm just gonna sit on it though. Does this payroll kind of clear the barrier for a bullish market in a month? I think it leads the way to potential less inflation problems. That's one of the reasons the market's responding in such an optimistic way to lesser payrolls, is because it simply means that we have potentially less inflation problems. Again, lower than expected inflation problems with lower payroll numbers. And again, I'm going to put these numbers up on screen. I realize I didn't do that yet. Unemployment again came in at 3.9%. So, yeah. Again, 175,000 non-farm payroll datas. I'll put this up. And then unemployment showed up at 3.9 versus 3.8. Still under 4 though, so still pretty good. Correct. NFP is positive for markets because it signals less inflation. And again, I told you guys this right before this report. You know, I told you guys the nuance of like the prelim data and like how it moved markets one way, but I think this payroll number is probably going to move the markets the other way. I think specifically what I said right before this report was that, you know, the prelim data had a positive correlation, but I think this specific payroll numbers, I think what I said beforehand is I don't think the market's going to react positively if payroll numbers come in over 240, right? And so payroll numbers didn't come in over 240. They came in lower than 240, much lower, and the market reacted positively, kind of confirming what I said, which is that the market essentially fears inflation right now because of a hawkish Powell. And again, people can argue whether Powell was hawkish or dovish. Again, it's kind of like arguing whether chocolate cake is good. I think people want him to be dovish. But I don't think any of that matters. I think Powell wants to keep interest rates high still. He doesn't necessarily want to even say we're going to cut rates this year, which I think is a very hawkish thing, regardless of whether we're slowing QT down. And again, stick around. So again, this is our trading results over the past week. We're gonna see if we can pop the week off. We're up about $1,500. We're gonna see if we can. We're gonna see if we can get another really good day today, day trading, and we're gonna start day trading pretty soon. So stick around, chat. I appreciate your hard work and honesty. We try, man. Again, I have my own biases, my own opinions, and I think sometimes if one of my opinions contradicts what people want to happen, they get weird, right? They get upset, they get mad, emotional, for lack of a better word, you know. But again, like I have my own biases, I have my own opinions, and again, I could certainly be wrong about any of my biases and opinions. That's the nature of the markets, though, is we're all going to have our own opinions on things, and it's all good either way, as long as you're respectful, even if you disagree with me. You know, we had somebody out here trying to just stir the pot and act like I just ban anybody that disagrees with me. I think anybody that really watches the stream knows that's not true, right? The only way I'm going to ban you is if you're super disrespectful or you just sit around waiting to poke. You know, those are the only way you're going to get banned, you know. Outside of that, you can disagree. I mean, Yair and I have been disagreeing on market sentiment, specifically with Apple this morning, and he's a regular member. I appreciate him. He's here a lot. You know, I disagree with a lot of different people, and again, it's all good. That's the nature of markets. I trade futures, stocks, mostly. You are rational and authentic. Hey, thank you, brother. I appreciate it. Hit the like button. This man drops knowledge, and he lives in Texas. I do. I'm a Louisiana boy, though. You know, so I mean, go Tigers, go Saints. You know, don't nobody care about Texas teams except for the Astros and the Rangers. Baseball, I like Texas, but football, I mean, you know. Nobody even remind me of the Astros this year. We are terrible this year. Absolutely horrible. Yeah, definitely top 3, Thomas. Are stocks better than Forex? Is strawberry better than vanilla cake? I don't know. Maybe. Possibly. Yeah, the Braves are freaking beasts this year, man. You know. Good for them. I like the Braves. I like old Ronald Acuna. My favorite teams are in baseball right now are the Braves. I like the Rangers, of course. I like, even though they don't win that much, I like Toronto. I like Vlad, Bo Bichette, Obviously, I've never rooted for the Dodgers before, but I think with Shohei, I'm going to start rooting for the Dodgers. I want to see Shohei win a ring, man. I don't care about the gambling thing. So he had one of his assistant guys gamble a bunch of his money. Who cares, dude? Like who cares? Let Shohei live his life. He's one of the greatest of all time. Possibly the greatest player of all time, and I think everybody wants to see him. Nobody wants to see him go Mike Trout's route, where he just rots away on the Angels. Nobody wants to see that. I blame Trout because Trout could have taken a worse contract and gone to a better team, but he stayed with the Angels to make more money, and it hurt his legacy. S&OW, I'm in it actually. I'm down on it, but I'm mostly flat. My average price is 170s, and it's a very small position. It's at about 160, so I'm not flat. I'm down a little bit, but yeah, we're certainly not in a recession, Eric, because of one payroll release. Again, the market reacted positively to it because it means less inflation problems. A recession is 2 consecutive losing GDP quarters. We're nowhere near that. Payroll data coming in under expected doesn't mean a recession. Again, if anything, we're in the opposite right now, where the market fears inflation because the economy and jobs market has been so strong that inflation spiked over the past year or two, really over the past few years. And so the fear right now, the enemy of markets is not a recession or depression, it's inflation. That's why the Fed is keeping high interest rates. That's why the Fed's propping up the federal funds rate, and they raised it high, and now they're pausing it at these high levels. They have been doing QT, quantitative tightening, basically reducing their balance sheet to keep interest rates high. And they're starting to slow that down. But again, if we were anywhere near recession or depression risks, the Fed would not be keeping interest rates this high. They're doing so because inflation is the real risk. And again, I talked about this before this release. It's really important right now, chat. It's really, really important to make sure we get inflation under control first. That is the number one priority because prices have risen so much in the last 4 years. And this is why people think we're in a recession or depression. This is why people think that inflation is still out of control when it's really not. Inflation, again, is at 3.5%. It's pretty standard. That's what it was in 2004. It's not like inflation is crazy high right now. But people still think it is because prices rose so much after 2021 with the QE that was going on in 2020 where they brought interest rates down to save the economy from the pandemic. That caused inflation spikes. And again, once prices go up, they very rarely go back down. And so people are still kind of feeling the effects of that inflation, 3-4 years ago. And that's why people think inflation is still a rapid problem, but it's not really right now. Inflation is really kind of where it's been for the last 20 years. The issue now, though, is that, again, once prices go up, they very rarely go back down. And so we need to slow the rise of inflation, and that should be our number one priority. And again, it's not at an unreasonable level. The Fed wants 2%, and that's good and fine, but we're at 3.5%. If we're looking at PCE data, it's at 2.8% per core PCE. And again, that's not a terrible inflation metric. We just got to make sure it doesn't go up from there because I don't think the public can necessarily handle more price rises. And so in that regard, we need to keep interest rates as high as we can for as long as we can and make sure inflation gets under control first. And because of all that stuff, I think these payroll numbers are a good sign. I think lower payroll numbers are good right now. We don't want more inflation spikes because, again, they've gone up so much over the past 4 years, if all of that makes sense. So that's kind of a look at like the economy, inflation, all that stuff. Unemployment's still at a reasonable spot. It's at 3.8, 3.9%. So. GDP growth is slowing. Maybe Q2 will be even lower. We'll see. Yeah, I mean, but that's kind of the point of keeping interest rates high in QT, Vlad, is to slow down the economy and GDP. Powell spoke Wednesday. Powell doesn't speak today. I don't think he does. I mean, let me check. No, we do have ISM manufacturer. We have ISM services PMI at 10 o'clock, though, that we'll cover. That's a pretty big report. We'll see. I mean, ISM services PMI is not a crazy... I mean, it's important. It's not as big as payroll numbers, though. All right, look at Apple break highs again here. And again, we're in Apple. I hope it keeps going up. AMD, we're almost flat in. Our portfolio, again, another good day. I'll show you guys a little look at my portfolio here. This is what I'm currently up on the day. We are up about $225 in equities. So you'll have to see it. Again, my nice little investment gains here. It's at 10 o'clock. Look at Apple's spike, though. Looks good. Looks good. I hope it continues. All right, Chad. So again, SPY holding here. We're gonna get ready to start day trading here. Let's do it. Again, we are already up really nicely here on this account on the week. Thousands, or not quite thousands. We're up $8,500. So we're up a couple. But look at the SPY rip. Again, Nvidia's up a lot. Nice little flag looking pattern here from the economic report. Again, as long as people don't come in here and try to act like this is somehow some technical move. Like, this is payroll data. Any big earnings today? No, not really. Nothing really big. We had Hershey's, Fubo, a couple other ones, but nothing big. Do we have a UFC event this weekend? I think we do. This is not a good card, though. You know, I usually buy all the cards. Let me see. Yeah, so tomorrow we have Pantoja versus Ursig. Just not a good card, though. I might still buy it because it's got Jose Aldo, Anthony Smith, Pereira, Paul Craig. So I'll probably still buy it, but... I mean, we just had UFC 300, so it's not a shock that the following cards are not that good. Where's Bitcoin at? Bitcoin has been looking really weak today. Oh no, Bitcoin spiked with payroll numbers, so it's up to almost 61,000. So that's good news. So you look at AMD up to 149. Your thoughts on the report? I think it's an optimistic look at inflation. I think inflation problems are less pronounced now because of lower payroll numbers. I think that's good. UFC 302. Yeah, 302 does look good. I'm not a big fan. I don't think the main events necessarily look good. It depends on who we fought. Like, Nico Price and Jeremiah Wells shouldn't be on the main card. But Strickland versus Costa, Makachev versus Poirier, Brown versus Dos Santos. You know, those are all good fights. Jalton Almeida, Alexander Romanov. That'll be a fun heavyweight fight. Almeida looks good too. But what about 303? 303, man, that's the one everybody's watching. I think they need to fix up the card a little bit better, though. Right now, it's got McGregor versus Chandler, and so I think people are going to buy it regardless, but they better fix it up a little bit. Khalil Roundtree versus Jamal Hill, that'll be fun. All right, so again, we're dipping down in the bottom of the range. We might start to take some small positions here, just try to build up a little cushion. All right, we got 2 contracts here, and you can see it's very similar to day trading stocks here on Apex. All right, we got 4 contracts. All right, so 5 contracts. All right, we took half off, locked it in. Boom. Most of it off. All right, we got out our first trade. We're up about 30 bucks. On that, I'll take it. Just kind of day trading. And again, if you want to try out Apex, they are a sponsor of mine. Again, I'm biased because they pay me money. Understand CFDC 4.41. Also understand I do trade off stream, you know, sometimes. Use coupon code BT. Get you the max discount. AMD bouncing up a little bit. Who do y'all have? Chandler versus Connor. Can't believe you just realized Bitcoin pumped. Yeah, but I'm not really watching Bitcoin for short-term economic data reactions. No offense to, you know, Bitcoin. I'm just not really watching it for big economic data reactions. I'm mostly looking at stocks in that situation. I don't really short-term day trade Bitcoin, you know, so what it does to relative to payroll numbers is pretty, you know, to me, insignificant, you know. Yeah, you know, you got some people that absolutely hate Conor McGregor. I think Conor McGregor is very smart. And I think I used to dislike Conor. But then you realize, like, how smart he is. You know, like, again, he wants you to hate him. Because if you hate him, you want to see him get knocked out. You'll pay to see him get knocked out. You know, so, again, it's the Conor McGregor effect. You're either paying to watch him lose or you're paying to watch him win. Either way, you're paying. And so there's a reason he's the wealthiest MMA fighter in the world. Because... again, he's just been very smart. He trolls people. And so, again, you see people that just absolutely hate him. They're the people that are getting the most wrapped up in the antics, right? But I think people that can really separate themselves from it and understand that he's just doing it to create hype. You know, you got to respect it. He's building the sport up. And I think that's a good thing. You know, I think that's a good thing. You must never understand the stupidity of certain folks you come across online. Yeah, man, my biggest pet peeve with people, and again, it's all love. I think, you know, you got some people that are so technical heavy, and I've said this many times over the last few days. I'm going to say it again, though. You got some people that are so technically biased. Like, they're looking at moving average crossovers and, like, all these different things. And I think, you know, I think one of the signs of an experienced trader or investor is somebody that recognizes that just because you don't trade like them doesn't mean you're wrong. Just because you don't, basically everybody doesn't have to trade your system, your strategy, especially technical wise, you know. And so if you think that your strategy and system is the only way, usually you just don't have that much experience, because experienced traders recognize A, how little they know. It's kind of why you see the Dunning-Kruger effect a lot, you know. B, experience shows you that just because somebody trades in a different way doesn't mean they're wrong. You got a lot of people that can make strategies work that I am going to utterly fail at. And that's okay. It doesn't mean they're wrong, right? I hate high of the day breakouts. I'm sure some traders live off of high of the day breakouts. But in that regard, right, like, since I've been watching economic data, one of the things that I see very, very often is I see payroll numbers come out here. You know, payroll numbers come out here. Yeah, you get traders that try to act like this is some type of technical move. Like, hey, that's not payroll data. That's from the freaking, you know, RSI, you know, hitting this level and the 9 and the 12 moving average crossing over and under each other in 10 seconds, you know. And it's like, that move? You think that's from a moving average crossover? Of course not. This is from a fundamental catalyst. And again, the thing to understand, chat, is that fundamental and economic catalysts are going to cause these type of moves. Technical patterns don't generally cause big, crazy reactions like this with high volume spikes. Like, that's just not what technicals do. Technicals is more like a slow churn in your direction. Catalysts from economic data and fundamentals are more like big bursts like this, you know, from the influx of buys and sells coming out right at the economic data reaction. Yet again, you got some technical people that act like this is going to be a technical move and that it doesn't have anything to do with payrolls. And that's got to be one of the most ridiculous arguments I've ever heard. Yeah, Covington did the same thing, just not as good, not as well. And Covington doesn't KO people, so nobody cares about it as much. Yeah, I mean, I think Khabib is one of the GOATs for sure. Definitely has Conor's number, regardless of what Conor says. You know. Yeah, I mean, the market's mass psychology is really what this is. So the stock market truly is mass psychology. Could you take Khabib? Oh, bro, dude, I'm guillotining Khabib in a heartbeat, dude. He ain't got my number, bro. Come on now, man. Like, listen, I'm the greatest guillotiner of all time ever in the world, bro. If Khabib went up to me, he'd get choked out, dude. Listen. You know, he might be, you know, decades and decades of sambo and jiu-jitsu training. But I've been training jiu-jitsu for 8 months, and I got a good guillotine. Of course I could take Khabib, bro. Like, come on now, man. That should be already understood. Of course not. Khabib's a monster, dude. He would destroy me. He would literally just joke around. Like, there's no shot. No shot. Yeah, the biggest problem with Khabib is his resume. You know, where I think it's hard to call yourself the greatest if you beat some people and then retired too early. I don't think he tested himself enough, to be honest. I think there's a lot more people who would, you know. But again, I could also respect him for standing on his principles, and so I think he's definitely one of the greatest. But could you wrestle a bear, dude? I wrestled 3 bears simultaneously, you know? Bro, I wrestle bears every day on this live stream, bro. Come on, man. Of course not. It's Khabib, man. Yeah. While I might not beat Habib, if you give me a 1-stripe white belt, you know, he's going down. That's all I'm saying. Are you trading things like OJ? No, of course not. Nah, man. You know, Connor's good. The problem with Habib is that his takedowns are so good that he doesn't even need to wait. Bitcoin's spiking up though. Like Habib can take you down in the first 5 seconds. As long as he doesn't get Ben Askren, you know, Habib's about to win. I mean, you always got to punch your shot, but 9 out of 10 times Habib beats Connor. Connor might catch him 1 out of 10 maybe, but it's just super improbable. Yeah, where's Coinbase at? Coinbase, you know, it's trying. Coinbase is ripped up to 230s this morning. Wow, I didn't even notice this. So Coinbase starting to fight back. Here's Coinbase on the top right chart. Starting to come back here. Look at this. Back up to over 230s. Technically green in after hours and extended hours. I'm from Louisiana. We got 25 minutes, chat. 25 minutes. Bro, this dude, man, I'm reading a horrible story. Ugh. Bro, when are the AMC pumpers gonna stop it? Do we have anybody here, chat? Do we have anybody here that truly thinks AMC is gonna do a mother of all short squeeze scenario? Anybody here? Genuine question. Anybody here that truly thinks AMC is going to do a mother of all short squeeze scenario? Genuine question. I'm curious. I want to hear their side. Yeah. Did your wife fall for the type 3 fastest typer or speakers in the world? Top 3 funniest people in the world. Humor can get you know, I think there's a real thing. So like when you look up what makes people attracted to other people, specifically women, but like people in general, there's a word for it. There's a way to describe it where women like men who other women find or other women are interested in, you know. I can't remember what it's called. When I met Carol's friend at the time was like hitting on me, right? But I wasn't really into her friend. I was into her, and it's a long story. I don't feel like telling it, but you know. But yeah, Carol and I have been together for 14 years now. 14 years. Honestly, though, her friend was just a horrible person. Like, a horrible person. Like, jealous of her. Like, using her. Like, just weird, man. Off. Hedgies are screwed now at AMC. It'll squeeze again. It might squeeze up to $5, but that's a pre-split price of 50 cents, brother. Yeah, it's good to see. I think, again, I'm in AMC. I hope it goes up. But I'm going to tell you guys a story about it. Like, listen, not a story. I'm going to tell you guys something that'll hopefully make you guys more resilient to this type of thing in the future. If your stock community is trying to make you feel all warm and fuzzy, like you're part of some big moral good, some big movement that is going to punish big banks and help the little guy at home, you know, and all you got to do is hold a wildly depreciating asset to do it. Run away. You know, again, healthy companies like Apple, Amazon, they don't need to talk you into holding shares. People hold shares because they're healthy companies. And so if your company is, number one, shaming you for selling, shaming you for saying anything negative about it, shaming you if you don't hold it long enough, shaming you for taking profit, trying to make you feel all warm and fuzzy like you're somehow fighting for the little guy by holding a wildly, again, they might be trying to talk you into holding a wildly depreciating asset. Did you wrestle alligators? Not that day. But now you have to, man. That's the thing. What? Tell the story? I'll tell it if you guys really want me to tell. It's not like it's a, I mean, of how I met Carol. I mean, yeah, again, I don't mean to sound like a broken record with AMC. I just think so many people are manipulated and taken advantage of. I really do. I think so many people are manipulated and taken advantage of by that community. Yeah, the problem, like, people acting like, look, the real problem is that you got basically rookie traders is what it boils down to, rookie traders. What I mean by that is when AMC finally squeezed, or when GameStop squeezed in 2021, a lot of people entered markets that were not entering them prior to that hadn't been into, like, people entered the stock market that never traded before prior to that, right? They entered these communities. And so you got these big communities of these rookie traders that don't really know any better, right? You got these big communities, rookie traders don't really know any better. A lot of them are new, right? And a lot of them don't even know what a float size is. So like when GameStop squeezed because it had a tiny float and a huge short float, 120% short float, 40 million float, small float, right? That causes the potential for massive squeezes. AMC is not that at all. It's not the same thing. It does not have a tiny float. It does not have 120% short float, and it was never going to squeeze like GameStop did. You know, but again, the problem is you got a bunch of rookie traders that don't really understand these things, and they just end up just kind of confirmation biasing it up by hoping it goes up, and so they overestimate the likelihood that it is. Again, maybe it squeezes, but yeah. The day I met your mother, yeah. I had met Carol prior to that, actually. Again, I met Carol's friend one time, and she messaged me, or it might have been my friend. I was with my friend, and she messaged me on Facebook, and she was like, "Hey, can you come over?" And so we were single guys at the time, so we're like, yeah, you know, they were like, hey, you want to come over and hang out with me and my friend, right? Which was Carol. This was the other girl messaging me or my friend. And so we go over there, and like my friend liked Carol, and Carol's friend liked me, you know. And so her friend was like sitting on my lap and like trying to, you know, hit on me or whatever throughout the night. But I wasn't really into her. No offense to her. I mean, I just wasn't really into her like that. I thought Carol was cool though. And so anyways, eventually they kick my friend out, the one that likes Carol. They're like, hey, you got to go home. And the other girl was, yeah, it's just a long, I don't want to get too like specific. Anyways, in the end, I was trying to hang out with Carol, which I did end up hanging out with Carol, but Carol was about to move, so It's a long story. Anyway, here we are 14 years later. My friend was always kind of weird with me about it, though. He was kind of like upset that he liked Carol, but Carol didn't really like him. And, you know, with this specific friend, it wasn't the first time that had happened. Like, I had another girlfriend back in the day that he was into, that was into me. And so it kind of had this weird resentment for this friend, where he would like girls, but they would like me, and he would get weird about it and started to get kind of toxic with me about it. Last I heard, I feel for him, man. Last I heard this specific friend, he's living on a beach in a tent right now, homeless. I wish him the best, man. I don't wish any bad things on anybody. Anyways, AMD at 148. Are you still friends with both to this day then? No. I mean, I don't really know what that friend's doing. Carol, again, this friend didn't have Carol's best interest at heart. She was using Carol, living at her house without paying rent, taking her stuff. Her stuff would disappear, as well as like just doing like weird things. In the end, it just wasn't, Carol and her aren't friends anymore. This was back when we were like, Carol was like 19. I was like 22. 21, early 20s. So best lesson for rookies: learn from other mistakes, buy fear. Yeah, I mean, listen, the market can cause a lot of struggle. Just trade small, learn how to day trade, build a small sample size up first. Even with swing trading or investing, my big edge, if you're holding things overnight or longer, don't try to short. That's dumb. Very risky, especially if you're doing it on blue chip healthy companies. The edge is against you. The longer you hold a long position in blue chips or index funds, the more likely you are to make money. The longer you hold a short position in those stocks, the less likely you are to make money. And so understand that true edge. Don't get pulled in all those short biased directions on long-term healthy companies, because then you're just playing against the biggest edge you'll have. The Big Short's a great movie. But, again, those guys got really, really lucky, No, not 36, but I'm definitely not in my 20s. I don't remember how old I was. I was anywhere between like 20 and 23. I'm not 36 though. I'm in my 30s though. And really, it's not quite 14 years. So you look 25 to 28. Hey, thanks, bro. I appreciate it. Good genes, man. Good genes. I look like my dad. Is what I look like. Hey, we got 14 minutes left, chat. 14 minutes left. Here's my dad, probably at about the same age I am. Watch. I show people this picture all the time. It's one of my favorite pictures. I do look like my dad, though. I look like my dad and all my uncles, right? Like, we have very, our genes are all, I look a lot like my dad. That's my dad when he was about my age. And so I look a lot like my dad. Don't need a DNA test for him, Again, there's Coinbase. Coinbase still over the previous closing price. Still over the previous close. 14 minutes is the stock market open. So we got the stock market open. I'm 19. Any investment advice? I don't have any specific investment advice. Just trade small, trade slow, save your money. Market opens and see how institutionals respond to non-farm. Yeah. Yeah, my dad's a falconer. That's a red-tailed hawk. Or no, this is a Harris hawk, actually. You know, this is actually a rabbit right here. You see, I played hockey when I was a kid. This is me. Kind of look. My son kind of looks like I did. Now that I look at it. The report came in much lower than expected, signaling strength in markets. I was terrible at hockey, dude. Horrible. You know, I could ice skate like freaking Michael Scott though, but I'm horrible at ice hockey. I'm probably okay at it now. I was good at roller hockey as a kid, right? So we used to play in the school parking lot. We'd play on roller blades, right? But ice hockey was just a different animal. You know, when I was young, you know, it's really funny because, and I tell my son the same thing. Like when you're young, you're learning how to move. Like you're not the most, like I was not very athletic when I was young. I don't think anybody really is when I was super young. Once you get older, you start to kind of like, once you hit your early 20s, your athleticism picks up, you know. But yeah, maybe it's just me. Yeah, Roth IRAs are powerful. Research those for sure. All right, so again, we've been basically sideways since the payroll data came out. Still bullish. Coinbase is up. I'm gonna put Apple up here maybe because we had Apple earnings yesterday. We can also put like Nvidia up here. Apple up to 185. So there's Nvidia. Nvidia up to 877s, almost 880s. Nvidia's breaking highs. That might drag the rest of the markets up with us. Yeah, we do have ISM PMI data coming out too. AMD at 148. Yeah, so ISM services PMI data comes out today. It's a big report. We'll see what it looks like though, but it's a big report. All right, guys. So NASDAQ up to 17.93, Nvidia up at 879. All right, chat. We got some time here to the opening bell, about 7 minutes, a little bit less than 7 minutes, 6.5 minutes. All right, chat. All right, Google flying up. Again, market's still kind of flat. AMD, Nvidia moving up as well. Or maybe Google's not flying up. Let me see. Meta's testing highs. Coinbase looking really solid here. Google. Yeah, Google flying up this morning. Still very green. All right, 4 minutes. You guys ready? Is Palantir ripping up? I'm in PLTR. It is ripping up today. Hey, you love to see it. AMD's flying up as well. I'm almost green in AMD. It took a little while. So what happened with AMD is we bought the dip after earnings, sold on the bounce, added back on the pullback, and now we're about to be green again. Palantir testing highs of the day at 2350s. We're in at 19s for Palantir. Again, AMD, almost green. No, I mean, I have, yeah, they're not going to take you to jail for missing jury duty. Like, usually if you miss it, they just get somebody else anyway. Like, they've been sending me letters for jury duty for a decade. You know, I just kind of forget to see them every time, you know, or just kind of somehow miss them every time. I don't know how. You know, I'm definitely not seeing them and then just putting them at the bottom of my mail pile and forgetting about it. I would never do that, you know. Is Intel waking up? I'm in Intel. Hey, yeah, it's back up to almost 31s. Unity, I'm in Unity, I believe. Yeah, I'm in Unity as well. It's up a little bit today also. All right, chat, markets open's about to happen here. All right, 3 minutes. All right, Fubo dropped earnings today. All right, guys, here's the opening bell in 2 minutes. You get Apple yesterday, caused spikes. You can see what companies that report earnings are bearish or bullish, you know? So if like the company's bullish, like Barron's or Wall Street Journal or whatever, you can see if they're bearish or bullish when they cover earnings. If they're bearish, they will really target on the negatives. You know, if they're bullish, they'll really target on the positives. All right, chat. 30 seconds. 30 seconds. Let's see if the market responds. Look at the Nasdaq ripping up ahead of the opening bell. Just broke highs right before the open here. Wow. Almost to 18,000 on the Nasdaq here ahead of the opening bell. 10 seconds. All right, here's the opening bell, chat. Let's see what we get. SPY moving up. Nasdaq moving up. Ding, ding, ding. There's the opening bell. All right, so we popped up a little bit at the opening bell. Now we're pulling back down a little bit. Palantir dipping, AMD dipping, hit 149s for AMD. Now it's coming back down. Meta still trying to hold. Unity ripping up. Watch NVIDIA. Nasdaq still testing the top of this range. Unity just broke highs. I'm gonna start buying this dip. 2 contracts. We got a little cushion on the day. Boom. Caught the little pop. And we'll get out there. So we're up about 50 bucks on the day. Meta starting to rip up, break highs. Wow, dude, I'm very green on the day. Wow. Intel. Home Depot. We're going to add some more to this. 2 contracts here. All right, we got 5 contracts. We're playing with the gains that we have. 7 contracts. Flat now. Shooting back up. Almost green. All right, we took half off. Took a little bit more off. Still somehow green from all these trades, or at least flat. All right, we're gonna add to this. There we go. Took half off. 1 contract left. We'll be a little bit more patient with this and maybe add to it if it starts to move up some more. There we go. We'll add to it 2 contracts now. Take half off there, lock that in. I don't like that move. So we're up. We made a couple bucks from this trade. Look at NVIDIA being super choppy here. But it's testing highs of the day. Market's starting to turn. We're going to start buying into this now. half off, locked it in. Maybe add more back to it, but we'll see if we bounce. There we go. All right, we took half off. We turned pretty quickly on us though. See, we're hitting support level, so I'm gonna start adding deep into the size. 6. There's 9 contracts here. Again, we're starting to add deep into this, playing off of the house money we've already made. We're right at the support. Popping back up. All right, we took half off. More. Locking it in. Boom. All right, we're up $173 on the day. Again, we bought right into that support level. We told you guys the idea. You can see we're up $173 on this account on the day. We're dipping back down a little bit. We'll buy this dip. 2 contracts. Took half off. Boom. All right, so we're up 190, basically $200 if you look at it. I'm gonna switch to the regular NASDAQ. We have some house money that we can trade with now. And so we're gonna switch to the regular NASDAQ 100. Much larger size, much more risk, but that's okay. All right, we got 1 contract here, the NASDAQ. Oof. We're trying to play with house money, but man, this big drops. All right, we got 2 contracts here. All right, we took half off. Got a huge rip. So yeah, we're up about 230 right now, 240. A little nerve-wracking with this larger size, but that's all right. We do have ISM manufacturing PMI data today at 10. All right, getting some choppy behavior here. Again, we do have ISM PMI dropping at 10 o'clock here, chat. So we do have ISM manufacturing PMI data coming out. Oh wait, at 9:45 we do have some data too. All right, so we're spiking back up. All right, bear with me, chat. We got ISM data. I'm trying to switch the stream pivot to talk about it. All right. All right, chat. So we're got some choppy behavior here. All right. All right, guys. So again, we are bouncing back up in stocks. Nvidia is basically flat. The SPY's starting to rebound back up. Is it Earth Day today? I didn't even know. Look at the market start to run. Let me see. Nice. Yeah, so we're up a decent amount today. Slow and steady wins the race. We got a nice little cushion that we can make some swings off of. I wonder if we had payroll data come out, so I just wonder if it's going to be choppy. I was going to buy that dip. If we dip large enough, I'll buy it, but I got to wait, I think. So we dipped. One contract here. We're going to keep it small since we already have a cushion, and we're going to add right back. Boom. Out. Whew. All right, we're up 300 bucks. 300 bucks. Didn't get the best fills there, but that's all right. There's ISM PMI data at 10 o'clock today. Yeah, so there's S&P, there's what's called regular manufacturing PMI data, regular services PMI data in 3 minutes. It's expected at 50.9. A greater level over 50 means more strength in the services sector. Below 50 means weakness in the services sector. Expectations for a slight strength in the services sector for April at 50.9, and then that's at 9:45, and then at 10 a.m. we have the actual ISM PMI data, which is the larger data release. 10 a.m. Eastern time is when the ISM, it's called the ISM non-manufacturing PMI, but again, really what it is services PMI data. I don't know what the Dixie's gonna do. I know most stuff dipped at the open, and now it's kind of bouncing. A lot of stuff's bouncing back heavy right now. I'm gonna take a little bit more off in Home Depot. Again, I bought the dip not too long ago, and we are up big on that trade. So again, we're getting pretty good, man. I'm telling you, we're getting pretty good at our swing trades. Come on, don't rain anymore. Let me see if it's flooding on my end. All right, guys. Hey, we got about 1 minute left. Good. The flooding. The flooding is no more. It's not flooding anymore. Yeah, it's Eastern time. Again, we got less than a minute now. Chat, less than a minute. So we're ripping up. And again, we are trading on Apex's funded account program in futures. If you want to day trade with me, there's no PDT in futures. You can see it's very similar to day trading stocks. I can't trade stocks directly, but I can trade the S&P and the NASDAQ, basically the SPY and Q price action. No PDT rule, and the patterns are very similar to blue chip stocks. Again, there's just no PDT rule in futures. I can day trade short, buy market, sell market, very similar. Again, Apex is one of the most legit funded programs in the world. They are a sponsor though, so I'm biased, but they give you a demo and they test your skill with the demo account. If you can pass the test with the demo, the base one, you got to make $1,500 in profit without losing $1,500 first on a 25K demo. It's only $30 to try that challenge, and if you pass it, you get a 90% split. And so once you pass it, if you make 10K, as long as you're following their rules and conditions, you get to keep 9 of that. You also get to keep your first 25K in profit. Great way to help support the channel. And again, to be fair, I think most day traders lose. I think most day traders are going to lose here as well. Let me check out ISM PMI data or the PMI data real quick. The market's spiking up. So services PMI came in slightly higher than expected at 51.3. 51.3 for services PMI data. Chat. Again, let me put this up on screen. But yeah, if you want to check them out, again, 51.3 versus a previous reading of 50.9, and they expected 40. They expected 50.9, yeah. So, again, here's the services PMI report. And, again, the market ended up ripping up on this report. But, again, if you want to check out Apex, I think most day traders lose. I think the same as here because it doesn't matter where you go. Most day traders are going to lose, but it's a lot cheaper to lose this. If you lose, it's $30 for the base one for the first month. And so you can use coupon code BT to get the max discount at all time. We also have Fed Bowman saying her baseline outlook continues to be that inflation will decline further with policy rate held steady. And so again, we're looking up some of the Fed members' speeches here. Again, 10 a.m. we got the ISM PMI data release. Again, global services PMI is what this was. The big one drops in about 14 minutes. Man, my portfolio is looking really nice today, man. Honestly, I'm getting really confident in my trading. Yeah, I'm getting really confident in my trading. We've just been accurate with my swing trades. Again, I think I talk about a lot of these trades as I get in them. Like an example of this is, remember I told you guys I bought Home Depot a couple days ago. My average price in Home Depot, even though I've sold a lot of it this morning, my average price is $335. Home Depot is at $345, and this was after I had a little swing trade / investment on Home Depot that I sold like a month ago before this big dip. It dipped back down. Let me see if I can show a graph here. Where's my other trades on Home Depot? It must have switched, I guess, with I know I got into more trades than this, to be honest. Yeah, there's one of the buys right there. Yeah, the show trades isn't working that well on let me put it on another screen. But again, we got in at 335s a couple days ago. Another trade that we bought a couple days ago was Meta. Remember, we bought Meta after the pullback. After the big dip in earnings, we bought it at 412s. It's now at 450, basically. So Meta treated me really, really nice. We also did the same thing with Apple. Again, we bought Apple at 168. Apple's at 184s. We did really well there. We bought Alibaba a couple days ago at 72. Alibaba is at 80 bucks now. We bought Boeing at 172. It's almost at 180s now. We bought Google. We bought Google at 156. It's at almost 170s now. We bought Intel. We're still waiting for that one to treat us better, but that one's green on the day. We bought Netflix a couple days ago. We're flat there. That's okay. We're in Palantir at 19s. It's at 23s. Snapchat, we're in at 10s. It's at almost 17. SoFi, we are green. Or no, we're flat on that. Snow, we're flat on that. We're in Tesla at 140s. It's now at 180s. Tyson Food, we're at 51. It's at 61s now. We're down a little bit on Unity. Down a little bit on Walgreens. Good on Walmart, though. So, I'll take it. No, I didn't buy Starbucks, although I think Starbucks is probably kind of cheap. Wonderland, you want to check it out with them. I'm not 100% sure with that one. I'm almost green on AMD. I'm about to be green. AMD about to break highs. We're at 149.20s for AMD. And this is after we bought AMD on the dip, sold, and then bought it back on the dip, and we are now effectively green on AMD as well. Yep, we're now green on AMD too. Again, here's my positions today, right now. We are up about $300. And we're green on the year, of course. So, again, we're up at 300 bucks. Look at NVIDIA skyrocket up here. Again, NVIDIA up to 885s. Yeah, today, here's my stats on Apex's, on my funded account program, if you want to see my net stats here. Here, let me put my graph up. My graph's even prettier, so I want to pull that up first. So again, here's my stats on Apex today. And my 50K funded account. Here's my full stats. So Apex, again, you can check out the link in the description. Use coupon code BT if you want the max discount. We got into 33 trades today. 76% accuracy rate. We're up a net of $250, about $40 in commissions. You can see my graph here. You can see my winning trades graph. So average hold time for both is about the same. Average winning trade is about the same as my average losing trade. So again, we got about a 1-to-1 ratio. Largest winning trade is larger than my largest losing trade. We're scalping, but yeah, pretty solid. I'll take it, you know. NVIDIA's still pumping too. Yeah, if y'all start spamming sell, I'm just gonna ban you. Yeah, I mean, Fernando, first they said Apple earnings were gonna, or first they said prelim payroll data was gonna crash the market. Then they said the FOMC meeting was gonna crash the market. Then they said payroll numbers and unemployment were gonna crash the market. Now you're saying ISM services PMI is gonna crash the market. No, it's not. You know, again, I think you want the market to go down, and so that's your bias. And again, maybe you're right, but it's not super probable. Again, you might be right. I don't know. But I'll tell you this, ISM services is not that big of a report to where it would cause a crash in markets. You know what I mean? So again, you got to stop looking at every economic report like it's just some market crash catalyst. Again, that's what rookie traders do. No offense. We might get volatility, but it's not going to be, it's almost certainly not going to crash the market. ISM services PMI. You know what I mean? People got to stop sensationalizing it. I think a lot of day traders start trying to talk about the economy and long-term investing, and so they think every other day we're gonna get a crash or whatever. But yeah, it's so easy to see the biases, especially like I see it regularly. Like I come to the stream every day. It's so easy to see it. At a certain point, it's just like, look, man, stop thinking a crash is gonna happen every other day. And again, if you find yourself betting against the strongest companies in the world, I might sound like a broken record here, but if you find yourself betting against the strongest companies in the world long term, somewhere you've been misled. And again, you see people and they almost hate me for saying this, but it's like, again, you're just getting mad at the messenger. We'll see. Meta just broke highs again. NASDAQ just broke highs again. SPY broke highs again. NASDAQ testing it. Some people, yeah, well, they want to be the contrarian. They want to be the next big Michael Burry, next big short predictor. And they idolize and romanticize that concept so much to where it hurts them. That's what it really is. Meta at 451s. All right, chat. 5 minutes. Meta at 451s. Again, Unity at 25s. So, tech is running. Right, 100%. A lot of amateur traders just go with technical moving average, RSI. And again, you can tell how new somebody is to broad markets in the economy. Right, for sure, media can be a powerful thing, man. Like, movies can be a powerful thing. It can sway people. So, like, they make... Like, and again, I love The Big Short. The Big Short's a great movie. It's a true story. But it romanticizes those contrarians so much. And it makes them look so cool that, that people just start ignoring the biggest edge the market gives you, And sure, the 2008 scenario was caused by greed, right? 100%, without question, was caused by greed. But in the end, like, the likelihood that you're going to be able to pick the top like that is so low. The edge is so small, that even if we're going to crash eventually, but the likelihood that you're going to be able to call it is so low, it's just not worth chasing, It's low probabilities, low edge. Meta's starting to rip up. It's at 451.50s. Tomorrow will be continuation. If you can predict tomorrow, I'll be impressed. I predict the market is going to close. It'd be closed tomorrow, personally. But I might be wrong there. Top 3 most wrong traders ever. All right, guys. Hey, we got 3 minutes here, chat. 3 minutes before ISM PMI. Yeah, Michael Burry has predicted 30 crashes in the last 20 years. He's been wrong about a large majority of them. A lot of people don't understand that, though. They just see The Big Short. Meta flying up, man. Wow. See if Intel can keep riding up. We bought Intel a couple days ago. All right, guys, we got 2.5 minutes. 2.5 minutes. Market is climbing up here. ISM data comes in at about 2 minutes now. Hit the live button next to the play button. Yeah, well, we got 2 different reports today. We got ISM PMI data. We've got non-farm payrolls. We also have unemployment. So, yeah, we got a lot of different reports dropping. Movies are very powerful. A lot of people are easily influenced. Yeah, for sure. I mean, again, I like The Big Short. The Big Short is a good movie. It's an anti-greed movie, and I understand it for sure. Again, I talk about this a lot. I've said this a bunch of times, but I'm going to go ahead and repeat myself here. You know, originally they created the Wolf of Wall Street to discourage people from behaving like Jordan Belfort. Leonardo DiCaprio said that people like Jordan are the worst people ever, right? But the ironic part about that movie is that it created a bunch of people that idolized Burry or idolized Jordan Belfort, and now you got a bunch of Jordan Belfort clones out there behaving exactly like he did. And I think the irony is just so funny there, because the movie was originally created as an anti-greed movie, and now you got a bunch of people acting like Belfort. And so again, people are easily influenced by movies. Movies can romanticize different things, you know. Nvidia breaking highs right now, though, chat. And again, to be fair, I think that we are seeing similarities with the 2000.com crash with AI. You know, and the internet was a justifiable technology investment and for a lot of these companies, but a lot of companies still failed and the market still crashed in 2000, and it took a long time to come back. And so I'm not saying a crash is outside the realm of possibilities. The biggest mistake people make is that they think it has to happen. Like, they think because they see this data point that it's a certainty, and it's not. And it never is, you know, and that's the biggest mistake that people make. And that's something the Big Short actually got wrong. Like, nothing's a certainty in markets. Like, just because one set of data is good or bad or whatever doesn't mean a crash ever has to happen. There's a lot of things the Federal Reserve can do to avoid a crash, like 2020. All right, guys. Anyway, here's 15 seconds. We got 15 seconds. Let's see what this data shows up as. Expectation is 52. 52 for services PMI. Let's see what it gets us here. All right, there's the report. Spiked up 50 or 49.4, lower than expected services. So weaker services sector, 49.4 is what ISM services PMI came in. 49.4 versus 52, lower than expected. A weaker services sector than expected here. So showing less economic strength, less economic growth here in the services sector. And now you can see the market turning down a little bit, which is kind of the opposite of what happened with payroll data. Payroll data came in lower than expected and the market flew up. ISM services PMI came in lower than expected and the market's falling down here. And again, 49.4 is what it showed up as. 49.4, we'll put this up on screen. I think the market's up so much, it's probably time for it to come back a little bit here. But hey, we'll see what happens. Oh, this is the regular NASDAQ. I almost traded it. I want to trade the micros. I'm going to buy this dip. All right, we're out. We scalped it. We'll add to it too if it gives us this. Sometimes the first move is the wrong move. That's kind of what we're betting on here. All right, we're out. Oof. We're certainly getting volatility here. I'm gonna get out. This looks weak. So yeah, we lost a little bit. We're still up hundreds on the day though. I'll put this up on screen. I don't know if this doesn't mean better chance of rate cuts. I mean, it wasn't super like outside what was expected, you know. All right, so 2 contracts here. We'll take half off there, lock it in. We're right back up to where we're well over where we were. We'll go ahead and get out the rest there. So we're actually green now on those 2 trades. Trading 1 contract here. Big bounce back here from it. And again, if you want to day trade with me, I'm on Apex's funded account program where they give you a demo, test your skill with a demo. If you pass the test, they fund you. If you fail the test, you only lose what you pay for it. And this is going to save day traders money most of the time. Most day traders lose money. And so if you try to put up 5K for a day trading account, you're probably going to lose it. And the good part about Apex is that it limits that risk. It allows you to take some risks, but not the full extent of risking thousands of dollars. It is very similar to day trading stocks. You can't day trade stocks directly, but you can day trade the S&P, NASDAQ, gold. Patterns are very similar to blue chips. You can check out the link in the description. Use coupon code BT. We'll get you the max discount at all times. Always remember, chat, CFTC 4.41, understand hypothetical or simulated performance have limitations with these funded account programs. Do not copy me. I certainly do trade off stream occasionally. You're not going to see all my trades, and I'm not an investment professional. Top 3 worst trader of all time ever in the world. Don't copy me. And again, chat, if you want to check out my other sponsor, a company called Chart Prime. It's a trading view service you can use in stocks, crypto, Forex, futures. I always try to show people a back test of the actual strong signals. Like, look how powerful these strong signals are. Like, I went back yesterday and showed people this. Like, look at the strong signals. Like, let's take a look. Just the strong signals, right? All right, so we'll go all the way back to here, okay? So look at the strong signals, just the strong signals. Let me put this up on the screen so you can actually see them. All right, so let's take a look at just the strong signals here. All right, strong signal here. This is a 5-minute chart. So this is like 2-3 hours of red action. Strong signal way up here. Beautiful follow through. Strong buy signal here. You got a little pop up. Maybe we can call this one wrong just for argument's sake, just to be safe. I'm going to call this one wrong. Strong red signal here. Beautiful breakdown for literal hours. Literal hours. All right, so let's see when we started this. We had one wrong. We had one wrong so far. And we started this April 30th, Tuesday, April 30th. So one wrong so far. Strong signal here, beautiful follow through. Strong signal here, beautiful follow through. Strong signal there, beautiful bounce. Strong signal there, nice little follow through. I can't guarantee this is going to work. Nobody can. Back test it yourself. Beautiful bounce there. This one was wrong. Definitely wrong. This one is definitely right, though. This one was wrong. So that's 3 wrong that I can see. 3 wrong. Okay, this one worked. Definitely worked. Look at this huge follow through afterwards. Strong buy signal here obviously worked. Look at this huge follow through for days. Strong buy signal here definitely worked. Moved up. This one looks like it definitely worked as well. And this one was wrong. So 4, right? So 4 out of all the price action since April 30th, right? So let's go ahead. Let's count how many of these happened since April 30th. I believe it started right here. Yeah. So again, 4 didn't work. 4 strong signals didn't work. I mean, I'm pretty sure. Did I count any other ones that weren't strong signals? I might have. Okay, no, I'm pretty sure. Okay, so 4 strong signals didn't work. If I did, my bad. I'm pretty sure we got this right. Out of, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So 4 out of 17 didn't work. So that is over 25, or that's over 75% accuracy, I think, right? But backtest it yourself. It's $40 a month. It can be a powerful thing, and you can use it with anything with a symbol on TradingView. I can't guarantee you're going to make money. They pay me money. Both of my sponsors pay me money, so of course I'm biased. This is called the Market Oracle Pro. But yeah, I'm biased, guys. They pay me money. Backtest it with them. Again, there's so many different things. Oscillators, screeners, backtesters, a bunch of cool stuff. It's custom trading indicators. But again, I find them powerful. So again, you can check them out yourself. They do not repaint. So they don't repaint. So it's not like they're going to show up and then go away if it doesn't work or anything like that. And yeah, y'all be safe, guys. Y'all be good. I love you all. Y'all have a great weekend. I'm going to get out of here and enjoy my week, guys. I've been working so much. Like, if you look at my channel, we've been putting in some work here. On beginner trading, we've been putting in some work, and my channel's been growing a lot. And so again, thanks so much for everybody that helped my channel grow. If we look at this here, you know, like, look at how much my channel's grown. Apple earnings, we got 17,000 views. Jobless claims, we got 7. Fed meeting, we got almost 40,000 views. Jolts, we got 10K. Amazon, we got 14K. PCE, we got 11K. So yeah, just thanks so much, guys. It's been a fun few weeks of growth here. We got 76,000 views over the last 48 hours that you can see right here. So hey, love you all. Thanks so much for the growth, chat. I appreciate the love. Remember, be safe in these markets. We'll see what happens, y'all. And yeah, y'all have a great weekend. I'll see you guys later. Pretty good day for my trading overall. In equities, I'm up about 300 in my investments and swing trades. And futures trading on Apex on a 50K challenge, we are up. Let me see if I can find it. Again, yeah, in futures trading, we're up a little bit more than this now because we had one more trade. But yeah, we're up about 250 on the day. I'll take it. I'll take it. Y'all be good. Love you all. I'll see you guys later. Y'all have a great weekend, chat. Good luck.